all directions as a result of several factors, COVID being one of them, as well as the inflation that we've seen in our economy in the last couple of months, impacting us in various dimensions. It's my hope that this morning we'll have very interesting discussions on the implications, what it means for businesses, and I hope that we'll have some serious takeaway from here as a result of this conversation. Thank you very much, and once again, you're welcome. At this point, I'll hand over to Mary to take us through our opening remarks. Thank you.
Thanks so much. Good morning, everybody. It's good to see you all. Having missed some of the opening remarks, I will not hazard a guess of verifying the particular participants, except to say welcome to all the distinguished representatives from the Nigerian government, national and international NGOs, and members of civil society in attendance, and members of the press. Good morning, everybody. It's really a pleasure to join you long distance to kick off what I'm sure will be a really fruitful discussion on the predictions, opportunities, and imperatives for business in 2022. The United States is deeply committed to Nigeria's future. Look no further than the Secretary Blinken's visit to Nigeria in November and the extensive community engagement and advocacy by the US diplomatic mission here in Nigeria. More into the details, over the course of our relationship, we've invested more than $3.5 billion in Nigeria's people through various initiatives ranging from malaria treatment to entrepreneurship programs. US donations of COVID-19 vaccines have topped 28 million, and we are the largest donors to the Gavi initiative, the Global Vaccine Alliance. We're on track to reach HIV epidemic control within Nigeria this year, thanks to the President's Emergency Plan for AIDS relief, with the support of the US CDC, USAID, and Walter Reed. The historic delivery of 12 A-29 Super Tucano aircraft, munitions, and training last year represent a big part of our commitment to improve security for all Nigerians. And tens of thousands of Nigerians have been exposed to world-class education through American colleges, universities, and exchange programs, including some 13,000 Nigerians studying in the US right now. These programs and initiatives are important, and we're very proud of our impact. But we all know that health, education, and security are not the full story. Economic development must go hand in hand with human security in order for Nigeria and its people to reach their full potential. COVID-19 has heightened the sense of urgency surrounding the reforms for Nigeria to meet the significant needs of its mostly young, mostly rural, 200 million plus people whose numbers are projected to double by the year 2050. The National Bureau of Statistics tells us that GDP growth for Nigeria's top revenue source, the oil sector, declined more than 8% last year. The non-oil sector, in comparison, grew 4.73%. While COVID-19's impact on the global oil market is certainly an issue in that story, the pandemic only highlighted what we already knew, that the oil sector alone cannot meet the needs of Nigeria's population. Additionally, as nations grapple with the realities of climate change and are incentivized to make more considered choices, the oil sector will be in even less of a position to enable Nigeria's economic growth. Fortunately, we see, all of us, Nigeria's immense economic potential. Nigeria's creative sector, composed of media, entertainment, beauty and lifestyle, visual arts, tourism, and hospitality, the new oil, as some people like to call it, is the second largest employer in the country, with immense potential for growth. It employs more than 4 million people today, with revenue of $4.5 billion last year, and the potential to produce 2.7 million more jobs by 2025. We've supported Nigerian creatives for years, including through our participation in the African International Film Festival. And during last year's festival, we partnered with the American Film Showcase and global media makers to present masterclasses for the creative community, and hosted US companies, including Amazon, Macro, and Paramount, which came to deepen their ties to the Nigerian film industry. We know that Nigeria's agriculture sector, which contributes 28% of real GDP, is ripe for market-led growth. With over 3 million hectares of arable land, appropriate weather conditions, and the potential to expand into agro-processing and export, and eventually through the full implementation of the AFCFTA, we've targeted this sector with programs through our USAID-funded West Africa Trade and Investment Hub. For example, last August, we ordered a $1.2 million co-investment grant to Tomato Jos, an American-owned, Nigerian-registered agro-processing company located in Kaduna. This grant leverages $8 million in private sector funding and will boost the productivity, incomes, and resilience of 4,000 maize and soybean smallholder farmers, who will receive loans to buy seeds and other inputs and be trained in agricultural techniques to improve their production efficiency and increase crop yields. Tomato Jaws will then buy the crops from the farmers at a pre-agreed price to stabilize and increase their incomes. And Nigeria's tech sector continues to make international headlines. Last year, Nigerian fintechs raised 60% of the more than $1.7 billion raised by African startups. Nigerian fintech firm Flutterwave was one of only 2 African companies named in Time's list of the 100 most influential companies in the world for 2021. We believe in the potential of tech to catalyze growth across all sectors, which is why we sponsored the 3rd Nigeria Tech Summit in December, to foster the next generation of tech entrepreneurs through on-site workshops, networking, and panels. We were also delighted to see the recent headlines that Nigerian agro-tech firm Tingo, which leases mobile devices and provides an e-commerce platform for the agricultural sector, is in talks to list with the New York Stock Exchange this year. A full, prosperous Nigeria is ready to be unleashed, but it needs the business community. And the federal government knows this. In December, Nigeria published its midterm 2021 to 2025 National Development Plan. It was remarkable in that it plainly noted a cost of 350 trillion naira, or $850 billion, to fully achieve the country's development goals. The plan also noted that a large part of the financing needs to come from the private sector. We already know that American companies will be there to step up to the plate. In addition to setting the highest standards for businesses operating in Nigeria, U.S. companies are supporting the Nigerian government's efforts to tackle its high unemployment rate through mentorship programs such as the Nigeria Jubilee Fellows Program. I attended the launch of the program's Jubilee Fund just weeks ago. As many of you already know, the program seeks to annually provide 20,000 Nigerian graduates with work opportunities in the private and public sectors to help bridge the unemployment gap. I was proud to see a U.S. company, General Electric, chair the Nigerian Jubilee Fellows Fund Private Sector Advisory Board, providing guidance and oversight. And Procter & Gamble, Google, Microsoft, Facebook, Visa, among others, have all committed to contributing to the program via donations or mentorship. But as always, we will continue to insist at the highest levels that the government do more to enable the business community. We will continue to push Nigerian officials to reach and maintain global standards for intellectual property protections and offer our support as Nigeria looks to domesticate the African Continental Free Trade Agreement. We will continue to encourage Nigeria to fully ratify the Open Skies Agreement that would encourage price flexibility for passengers and shippers and encourage competition to improve and expand service for passengers. And at every opportunity, we raise the unpredictability of regulations, lack of contract sanctity, critical access to foreign exchange, and the need for consistent application of duties and tariffs. As these discussions continue today, we look forward to hearing more from ABC, KPMG, the panelists, ABC's membership, and other attendees on how best to support and enable a stronger and more resilient Nigeria. Thank you and good deliberations.
Lagos Free Zone, the first private free zone in Nigeria with the fully integrated deep sea port, is an ideal location to serve the demand centers in West Africa, home to about 350 million strong consumer base. LFZ is well connected to all major cities in the hinterland by road and by air. We are located 65 kilometers east of Lagos metropolis along the Lekki Corridor, the Sunrise Development Corridor of Lagos State, fast consolidating itself as the engine of economic growth in Nigeria. Uniquely integrated with Lekki Port, the deepest seaport in the region, Lagos Free Zone unlocks deeper reach to local and international markets. Sustainably developed as the premier investment location for varied businesses, LFZ is an ideal destination for manufacturing facilities due to its strategic advantage in enabling easier access to critical success factors such as land, world-class infrastructure, and an unwavering commitment towards enhancing the ease of doing business in Nigeria. Investors in Lagos Free Zone benefit from the conducive and hassle-free live-work-play environment. Amenities such as housing, hotels, parking hubs, communications infrastructure, power station, medical facilities, and leisure centers are provided and maintained so that you can focus on growing your business. In addition to the enabling environment for growth, investors at Lagos Free Zone enjoy a host of fiscal benefits and preferential policies backed by the federal government of Nigeria and the Nigeria Export Processing Zones Authority. These include various tax benefits, import duty exemption, unrestricted access for skilled workforce, and tax-free remittance of profits and dividends. Lagos Free Zone is a world-class industrial zone, carefully planned with state-of-the-art infrastructure, services, and facilities to help your business thrive. We welcome you to Lagos Free Zone, your gateway to a new frontier.
Good morning, everyone. Good morning. It's good to be here today. What I'm just going to do for maybe 5 minutes is to share some introductory thoughts that will sort of usher into our panel conversation, right? We're going to be speaking to experts in different dimensions of the economy for them to give us guidance on what 2022 is going to look like and where the opportunities are, right? That's what the conversation today will be about. But before we go right into that, I will share some thoughts just on a single slide on the factors, the trends that we think will shape 2022. We're in the third month anyway, so we have like about 9 months to go, right? Then after that, I will call on the panelists to the eye table and can then get into the discussion. That's really the meat of the day, right? So let me just dive right into it very quickly. For us, we've talked about the numbers. The number that came out, for GDP was much more, than everyone had expected, right? And then when you look at 2022, we have identified 7 key trends that we think will shape the development within the Nigerian economy, right? And I'm going to start. The first is really the global pressure and geopolitical tensions, right? This has a number of ramifications, on Nigerian economy. So when you look at the global pressure, you're thinking about what's going to happen to interest rates within the global environment. One of the news we heard lately is that Nigeria wanted to raise Eurobond, but I think the market is not really attractive enough, right? So the question we then need to ask is, the Federal Reserve in the United States has a plan to raise policy rates, about 4 times in this year. What would be the implication of that development, on global interest rate environment? And more importantly, when you bring that to Nigeria, what's the implication for capital flows? Are we going to have a shock level event in which there's capital flow reversal, or are we just going to have a broad reduce in the trend of capital flow? That's one important point we need to think about. The other bit is around oil prices, and we know it's been dangling high, right? We don't know how long this shock will be for. We don't know if the responses from releasing strategic reserves or reaction from OPEC could further sort of change the direction of the oil price. But currently, there's a bit of a shock, and it's relatively high. If it's maintained at that high level over the next few months, it portends a positive outlook for Nigeria. Obviously, there are other internal issues to consider, to see if we're going to reap the benefit of a higher oil price, because in the recent times, we've not been able to achieve that, right? So that's on one point, the first and important point to consider. The second bit is what we call the socio-political pressure, and essentially is looking at the political fabric of Nigeria and the point we are, and it's a pre-election here, election activities are eating up. The Electoral Bill Act has been signed, albeit one amendment has been requested for. And the question we need to have at the back of our minds is that how would that potentially impact economic development in 2022? There's always this myth of election spending. Could that potentially increase, discretionary spending within the economy? Could that potentially spur economic growth, right? That we need to think closely about. Yeah, the other bit is issue around persistent insecurity, right? Almost through, the geography of Nigeria, right? And then you then ask the question, how would this pan out? Would this affect agriculture as it has done in the past? Could this affect our oil production right? Which is another area we need to potentially look at. So this is the second factor that we need to consider. The third point, which is very important, is around policy and policy implementation. So we have some fantastic policies that have been set in place, and one of our panelists will talk extensively around that. So we have the PIA, which could potentially revolutionize the oil and gas sector and decently attract some form of capital. So the question we need to ask ourselves in 2022 is, will the implementation be fast enough for us to begin to reap the potential benefit of the Petroleum Industry Act, right? The second point is around the Finance Act, that has been set in place. How would that potentially affect the economy for 2022? That's the third point. Moving on very quickly, the fourth point, or the fourth mega trend, is around fiscal sustainability, right? We know we are running on borrowed time, if I use that word loosely, right? Budget deficit is expected to grow higher in 2022, right? And the federal government will say that the issue Nigeria has is a revenue issue. So the question we then need to ask in 2022, we will be able to close those revenue gaps with the Finance Act helps, to realize better revenue for the federal government. That in itself will impact, the outlook or the realization that we see in 2022. The fifth point, as I sort of wrap up, is around the FX environment and monetary policy. We know there's really no stability around this, in the past, couple of years. The CBN is coming up with various innovation with the latest RT 200 program. I think the question we need to have at the back of our mind, and our panelists need to also engage on, is, could this impact, access, liquidity, and stability of FX pricing in 2022, right? Or are we going to also keep modeling through this reality of the constraint of access to FX, right? That's the fifth point. This last 2 points is really around consumer, and there's several things that are sort of coupling together to make consuming power, purchasing power impaired, right? We know inflation will remain double digits in 2022, right? And we know that pressure, on getting to bring in a market reflective tariff rate, and I think that has started in one way or the other. So pulling all this together with high level unemployment at 3.3%, right? How will consumer fare in 2022? That also then dovetail to industries that are closely linked to consuming or the purchasing power of consumer, right? That's another area we need to look at as we sort of reflect on 2022, and we're going to debate when we discuss with the panelists. Finally, is the point around the investment and the funding climate, right? We know from domestic funding perspective, right, CBN will continue to drive its development finance initiative. They've said that, and they're going to sustain that. So there will be some sort of liquidity. Obviously, the banks will still be with all the CR debit and all that's been happening within the market, right? That's one angle. But more importantly is to think about foreign investment, both direct and portfolio. Direct has been remarkably too low, right, in the past few years. So the question we then also need to sort of think about, in 2022, are we going to have a delta to this? Will this change? Will we be able to get the foreign investment we need to fund growth, right? And the kind of growth that we need to really move the economy of Nigeria forward, right? So these are the 7 things we think will be critical in shaping 2022. And we'll then just quickly go into the panel discussion now and sort of discuss these things. And the framework for the panel discussion, I will explain once I bring up our panelists. So I'm just going to call up the panelists so that so that we'll start very quickly. So I'm going to start with Ari. Ari Aisen, the IMF resident country representative, the person we all wait to hear from all the time so that we can see where things are going. He's been in Nigeria for a while. He's a Brazilian national, been in IMF since 2003, worked in Central Bank of Chile. He was a student of University of California, where he did his PhD in 2003. He's also taught macroeconomics, monetary economics, and international finance. So he's both an academic, a diplomat, and a forecaster. Iri, please join us on the I table. Yeah, can we please clap for him? Yeah. All right. I would also like to call Ineka Enwereji, an executive director with Citibank. Ineka is an ED with Citibank, where she is responsible for global subsidiary group. She's led delivery of several landmark financing transactions and providing strategic solutions to clients across different industry. She's been in banking for over 28 years, and she's had experience that cut through, treasury, fixed income trading, capital market, corporate and investment banking, and risk management solution. And she's going to bring practical financing, sort of perspective to this panel. Ineka, do you want to join us on the panel? Can we clap for Ineka? All right, quickly. I would like to invite the sponsor of the advert we watched earlier on, the CEO of Lagos Free Zone, Dinesh Rathi. He has almost 20 years of experience working in both India and Nigeria. Started his career with Unilever Group and also have banking experience with ICICI. Currently, is leading the huge development of Lagos Free Zone development in Nigeria. Dinesh, please want to join us on the panel. Okay, and last but never the least, because if it's the least, we're all in trouble. Right. I would like to introduce Engineer Justice Derefaka. Is online. Is technical assistant to the Honorable Minister of Oil and Gas, Minister of State for Oil and Gas. He has experience. Sorry, he has masters. Sorry, Engineer Derefaka is a marine engineering graduate from Rivers State University. He has a master's degree in environmental management and a second master's degree in sustainability from Cambridge. He also a doctoral scholar at University of Bradford, UK. He's currently the technical advisor on gas business and policy implementation to the Honorable Minister of State, Petroleum Resources, His Excellency Chief Timipre Silva, in the Federal Ministry of Petroleum Resources. Engineer Derefaka is online. Can we just clap for him? Do you want to show his face? All right, without much ado, I will take my seat. Engineer Derefaka, do you want to show your video so that we can see you online? Thank you. Okay, can we check our mics working well?
Probably so.
Probably so.
Hello.
Your mic is working well. Okay.
Not sure. Is it? Hello.
All right. Super. I think we can start. Engineer Derefaka, can you hear me clearly?
It's very clearly. Yeah.
Very clearly. Thank you very much. Okay, we'll start the panel discussion right away. It will be for about an hour, and what we want to really discuss is in 3 dimensions. The first element of discussion is to ask the question. We've had diverse perspective on the outlook of Nigeria economy for 2022. What I would like our panelists to do is to share a bit more perspective on that from where they sit. Dinesh will talk from a practical experience, working in real sector. Ari will talk about experience, sort of analyzing the Nigerian economy, and Ineka will share perspective as a banker on what we really see in 2022 as outlook for the economy. Then after that, we then need to take it away from the outlook to talk about the opportunities that we see in the Nigerian economy in this 2022, because it's also important to reflect on where we can make investment, and we can make bet on as businesses, listening to this conversation. Then we then go to the third part of this discussion today, which really talks about the implication of this for businesses, essentially asking the question, what must businesses do to explore the opportunities that, is in 2022 and sort of mitigate against the risk. So that's really the framework of the conversation. And I'll start this way. I'll start from Ari. We've had, very good performance of Nigeria economy in 2021, over and above a lot of analyst expectation, right? I think the way to then sort of phrase the question, given this base that we've achieved in 2021, what's the outlook of the broad economic performance in 2022?
Okay, thank you very much. You hear me? Is it working?
Yeah.
So thank you very much for this opportunity. Let me praise the ABC and the sponsors, KPMG and others, for this event. It's always good to be able to talk, particularly on the economy. You are right. The growth in 2021 actually was above the expectations, above the forecasts of the IMF, of the Central Bank of Nigeria, and above several analysts. So we were projecting at some point 2.6%, and then we raised to 3%, and it came above that 3.4%. That shows to us quite a bit of a vibrant underlying economy. There is some momentum, and growth has been broadening among various sectors, which we didn't see before. Now there are two, in our view, two factors at play here. In Q2 and Q3 mainly, but also Q4 to some extent, there were very favorable base effects. In 2021, it was a very negative year. The contraction in GDP because of the lockdown, because of the pandemic, was extremely important. So, for example, in Q2 2020, the economy contracted by 6%. So all of us were expecting a rebound in 2021 due to the shock, which was well managed to the extent possible, particularly on the health sector in Nigeria. But people were already expecting, everyone was expecting a rebound. So that is something that we need to think about when we make the forecast for 2022. So that is something that we need to take into account, because both in Q2 and Q3 of this year, of last year, 2021, growth was 5% and 4%. Now, in 2020, in Q4, the last quarter of last year, then there was a surprise. And if you look into the GDP growth, where the sectors really surprised positively, one was agriculture. Agriculture is a sector very erratic and difficult to predict, and it makes 25% of the Nigerian economy. So that is one point to keep in mind, but certainly it was a very positive performance. On the manufacturing side, until the first half of 2021, there was still a contraction going on. In the last two quarters of 2021, you'd see a different performance, and it ended up growing in line with GDP, 3.4%. So, ICT was a sector that grew a lot. We were expecting some deceleration. It did decelerate, but by much less than what we were expecting. So there are very, very strong sectors in the economy performing reasonably well. So with that in mind, in between the momentum that we expect that is happening now in the economy, positive momentum, minus the base effects that are not going to be as favorable in 2022 compared to last year. On balance, certainly our forecast now that was 2.7% for this year probably would be revised upwards. There is some scope to revise that, taking into account the performance that we saw and the momentum that has grown. Having said that, and however, with the policy framework that we see for this year, it's not going to be able to reproduce 4-5% growth rates year on year that we saw in some quarters of 2021. And I hope that I'm wrong. So I am, together with all of you, expecting the highest possible growth rate. So here it's not a competition to know who is right. So certainly we would love to be able to see high growth rates. But the issue is that without a policy framework that supports what we see the main engine for growth, which is the private sector, that macro stability that generally is conducive for the visibility of the private sector, it's difficult to project much higher growth rates, hopefully higher than the 2.7 that we currently have. We will need to wait and see because we are revising our forecast at this moment. So we don't have a number to give you, but certainly I would say higher than the 2.7. I'll stop here.
Thank you very much, Ari. Let me write on that and go to Ineka. Ari, you sort of alluded to we'll have a higher than 3-point-something% growth, right? Ineka, for you, from the banking sector and perspective, right? How do you see, lending and, credit creation, given even this more optimistic, outlook of the economy in 2022?
Okay, thanks. I just want to make a couple of comments just to, segue from what Ari was talking about. I think feeling the pulse of market operators, we do have the sense that there's a real rebound that is happening. And I think it's, partly driven by the large domestic market that we have. Okay, we have lots of people rapidly growing population, eager to get goods and services. There's also a very large informal cross-border trade that is happening, that is driving, growth and demand for goods and services. And in all of that, that's part of the, surprise that we had on the GDP, barring the base effect like Ari spoke to. So we have all that is playing out, okay? That is continuing, right? We expect that to continue. The fact that population is still very, very high and growing very rapidly and all of that. Having said that, it's also a pre-election year, right? We mustn't forget that. And that comes with its own dynamic, in terms of, the policy environment as well. We don't expect any new. It's more like a policy consolidation as opposed to bold new policies and all of that. And the market operators would also kind of build that into their scenario. The other thing that we should also consider is the fact that normally we have enough geopolitical tensions, especially with the Russia-Ukraine crisis and the rising interest rates that should, cause us some challenges and impact our outlook. But from where we sit, we see that maybe you say, thankfully, okay, Nigeria is, the impact on Nigeria will be more muted, given the fact that we have we've already had the capital flow reversals, right, happening. Okay, the fact that 2020, 2021, our capital flows are really at an all-time low, which is why you see some seeming growth, right? Because we have a very low base, so the impact will be more muted. But coming back to your direct question about lending, I think with the devaluation and all that has happened, we've also seen that companies may need more working capital. And that is triggering some higher demand for loans, although the banks are very cautious about lending. The retail lending is also really gaining strength. And I think that will continue to grow because there's also this young population. There are more digital loans, more digital transactions, e-commerce and all that. So there's a lot of growth that is happening in lending. Banks are just being very careful. But I think we will see growth in the lending area triggered by these things.
Thanks, Ineka. Dinesh, let me just come to you. Moving to the real sector, and manufacturing, which is supposed to be one of the mainstay, for job creation and drive economic growth. How do you see that panning out? Even within the context of a better outlook for 2022. What are your views?
Good morning, everyone, and thanks, Shagun. So, like Ari said, and my response was that yes, the whole recovery and the rebound is very welcoming. But we all have to remember that it's coming on the back of a very low base. and that the base effect makes it look really good. However, all said and done, the tailwinds are in favor at the moment for Nigeria, given the oil prices rise, and we see a recovery happening. The rebound is for real, and we see a lot of activity within the manufacturing space at the moment. And but we have to be mindful about few things. I mean, if you look at the mint countries, which is the Mexico, Indonesia, Nigeria, and Turkey, right? Nigeria is the only country which, as a share of GDP, manufacturing share of GDP stands at about 10%. The rest 3 countries stands at about 20%. So there is an increase and heightened need to increase that share to a high double digits, at least to the near about 20%. Now, there are 3 factors, right, which play when we look at the manufacturing space. And I think on the first 2, Nigeria has done fairly well. One is the policy framework, which is around creating an enabling policy framework for operators to invest in manufacturing capacity. I think there are 2 programs of the federal government of Nigeria, one of them being the pioneer status, which the NIPC has, and the other is the free zones framework, which is regulated by Nigeria Export Processing Zone Authority. Those 2 are very, very kind of motivating frameworks for people to get into manufacturing. The second is the availability of finance, and I think central bank through the development finance initiatives and their multiple programs has ensured that the availability of finance reaches out to those who actually need it for putting up projects. There has been a increased impetus on that front, and also the real interest rates thankfully have remained negative. So it makes immense, economic logic to put investments in that. The third factor, which has kind of been the plaguing factor for the manufacturing sector in this country, has been the support infrastructure. We call it power, ports, roads. While there has been a lot of work which has been happening, but I think it's lagging behind, in terms of what the market really needs. So there exactly where, people like us, the private operators like us who are building the Lagos Free Zone come in. We provide a solution to these problems in terms of by providing reliable power, by providing a deep sea port, which will be one of the most efficient ports in the country. So once all these ingredients work in a very cohesive way, I think we can really work very well on the manufacturing space.
Thank you very much, Dinesh. I think essentially said that, look, there's a potential scope, for our manufacturing sector to grow, and the emerging infrastructure, that can really drive that growth. So which means in 2022, this may be a bit optimistic, right? So let me just go to Engineer Derefaka, and my question really to you. We've talked about the banking sector, we've talked about the broader economy, we've talked about the rail and manufacturing sector. For the oil and gas sector, right, we know what's happening within the global space, which has impact on prices, right? What's your outlook of the local economy in terms of oil production and activities within oil and gas sector? Noting that oil production is really one of the key drivers of our budgeting of fiscal planning in Nigeria. Well, what's your view on that sector? What's your view on the outlook for 2022? Can you unmute yourself, Engineer?
Can you hear me now?
Yes, I can hear you. Thank you.
Okay. All right. Let me start with the question about the oil price and how that reflects with what is happening in our country. Now, presently now, yes, indeed, the price have gone up as opposed to what we have with during the COVID period, and like my boss has rightly mentioned, His Excellency Chief Tip Receiver, Minister of State for Petroleum Resources, with the rising oil price for us is worrisome, as we're not gaining from that soaring rate, and it's very simple. We're unhappy with the high price because at this point in time, if you look at what our production is down, and because we need to shorten as a result of OPEC quota. Now, when we ask to short down, because you cannot get the desired number to short down mathematically, you will find out that most times we're able to short down much more than what we expect. So we overcomply. And now to get back up, we need to put a lot of things in place. So which is why at this point in time, the oil price right now is not favoring our country. Now, the other thing I'd like to mention is that as the prices are going up, it equally affects us internally in the sense that we are net importer of petroleum products, like you all know. So as net importers, it's not very good for us. But of course, in a way that we are saying as if we're going to produce more and you get more dollars from your production, and then of course, it give you more money for your inputs. But if we're now producing less, and then we still must make sure that the Nigerian market is supplied fully, and then you get that, and then we have a shortfall of what we generate from our production. So it's suboptimal for us, and we're doing everything to so that we ramp up our production so that we'll equally benefit. Now, like what we're looking at now, basically, we will be happy if the rate, so our comfort zone basically is for the price to be between $70 to $80 per barrel. That will give us some form of comfort, and which makes a good sense, because our importation of PMS, like you all know, PMS subsidy, and of course, gasoline subsidy will also go up when the prices of crude oil go up for us, which is why everything is being done to address the issue of taking our production upwards. Now, on the other part, generally about the oil and gas industry, which I will go into specificity, we all know that we now have the Petroleum Industry Act, which was signed into law by Mr. President last year, August 2021. What that has done is that it has now opened up a huge investment opportunity for the country, that it gives investor confidence to come into play in that space. Now, if for those of you that have been following what is happening in the oil and gas sector, prior now we have issues of deferment of core investment because of our outmoded laws. The Petroleum Act of 1969 was obsolete, and so we struggle as an industry to be at par with other with our contemporaries. And as you know, the oil and gas industry being segmented into the upstream, midstream, and the downstream, there was a big lacuna with respect to the midstream, and of course, to some extent, the downstream. What the PI has done now is to decouple the upstream from the midstream. Now, another bit again that I will speak to is the issue around infrastructural deficit. So what the PI has done now is to see how we will have infrastructure across the country and even beyond. Like yesterday, at the ongoing Nigeria International Energy Summit, an MOU was signed by the Nigerian government and Equatorial Guinea on how to supply gas to that country. So what the PI is doing now, again, in line with the federal government's decade of gas mantra, which I will speak to, given the opportunity with time, if time permits us, is that whilst our focus with the national gas policy approved by the federal government in 2017 is to see how we can deepen our domestic utilization, we are equally saying that because we have over 206.53 trillion cubic feet of gas proven and an upside of 600 trillion cubic feet of gas unproven, we can actually take care of our domestic deepening our domestic utilization, as well as meeting international requirements, which the Nigerian liquefied natural gas is addressing, plus the Trans-Sahara pipeline that is going through Egypt and Morocco, and of course this other MOU was signed with Equatorial Guinea. So I don't know how much time I have, but let me pause it. But again, the other bit, permit me to equally mention some of the challenges we had prior to the PIA, so that everybody will see that indeed the PIA is a game changer. Of course, I don't know if there are lawyers in the house. They say that a dirty law or an incomplete law or a haphazard law is better than no law at all. So it's not all gloom and doom. The PI in itself has a lot of benefits for investors to come in, so that they will have now address the issue of sanctity of contracts. It will give them that confidence that the ease of doing business in Nigeria oil and gas sector is there because the fiscals, which they've been complaining about, has been taken care of. Yeah. Plus, there will be return on investment for the businesses. The other bit why most people don't want to come and play in the oil and gas sector in Nigeria has to do with what I call the resource host communities, issues and challenges. But now that has been addressed because there is a place, now there's a provision in the PIA that address community issues, which will, to a great extent, reduce the issue of militancy and agitation and restiveness and how communities attack oil and gas operations and activities. The other issue before now was policy uncertainty and then poor infrastructure, which I've talked about. And there's a huge infrastructure deficit in the sector, particularly for the midstream and downstream. And the PIA came up with two new regulatory bodies, the Nigerian Upstream Petroleum Regulatory Commission, which address the upstream. And then we now have the Nigerian Midstream Downstream Regulatory Authority. The good thing about the PIA, what it has done as a game changer, looking at supply side enabling, is that the downstream midstream now has what we call an infrastructure fund, because now it is going to address the infrastructure deficit that I talked about. So government is now generating money from the process of crude oil sales and gas sales, and then making sure that they invest in infrastructure development. And of course, permit me use this opportunity to speak to our teaming audience, both local and international, to say that the environment is ripe for investors to come in, because in the area of infrastructure, you will not get it wrong. So I will stop here and then I will come back again to have further discussion. Thank you.
Thank you very much, Engineer Derefaka, for the excellent point. And I think the point you made is the international oil price development may not, at the end of the day, be fully beneficial for Nigeria, right? But there are other internal changes and policy development that could potentially sort of change the fortune of the oil and gas sector.
Moderator,
excellent point.
If I may say, we are being a bit too optimistic here, so maybe the IMF needs to.
Go ahead, Ari. Go ahead.
Sorry. No, the PIA, I agree with the engineer, is a very important piece of legislation that certainly improved things and the outlook for the oil sector. But the key here is implementation. And the implementation is faltering because, as we know, the postponement of the fuel subsidies by 18 months is not in line with the PIA. And I think we have to be honest about it. And it doesn't necessarily give the right signal that everyone is expecting from the new framework, which is the liberalization of fuel prices in Nigeria. Of course, the issue, as we've been saying, with fuel subsidies, is that it's very important that those who actually going to be negatively affected, they can be protected. There are many vulnerable segments of the population who need to be protected. But that subsidy is targeting not the poor people. And let's get it very clearly that most of the beneficiaries of that subsidy disproportionately are rich Nigerians, not poor Nigerians. Of course, you know, there are other prices in the economy that will be affected if the subsidy is removed, like, for example, urban transport. That needs to be thought as a solution for that. But I think it's very important just on this issue of the PIA to make sure that the implementation is there of all the good areas that the PIA tried to actually attack, and also on the governance of that industry, the regulatory bodies, making sure that the Ministry of Finance and Ministry of Petroleum have a share in the board of those regulatory commissions to make sure that the budget can receive enough of the revenues. And it's the main fiscal policy instrument of Nigeria to be able to take those revenues and spend in the very appropriate areas that we know that are social spending, infrastructure spending, because at the end of the day, it's not enough that Nigeria grows at high rates. It needs to be very, very inclusive, generating the employment that is needed, and the private sector needs to be the main engine for that. And for that, you need a good, not only a good framework, legal framework in place, as the PIA is the right legal framework. Many will debate, but I think that it is the good framework, but the implementation of what was agreed on the PIA, to me, is going to be the main issue for Nigeria going forward. We haven't discussed, when we discussed the outlook, and my colleague actually pointed this very well, we have not talked about the risks for the outlook. I don't know if you want to do this at this juncture, or you're going to have another
I think
section for that.
Yeah, we can do it at this point. And what we should be talking about.
Yeah, let me just clear something.
Engineer Derefaka, I will come back to you. I'll come back to you. So let's just let's take it in bits. So what we should just move into the next segment, which is essentially talking about where are the opportunities that would drive the outlook, right? And what are the risks? So panelists, as you share your point of view, let's balance the opportunities. Obviously, we know there are also implicit risk that we see, within the market, right? I'm going to start from Dinesh, right? From where you see it for the manufacturing sector, where do you see the opportunities, right? And what are the potential risks to that, optimistic more than 3% growth that we see in 2022?
So there are multiple opportunities we at Lagos Free Zone have actually identified as a means to attract investments, manufacturing investment into our zone. And when we did the master plan, what we did was we did a multifactorial analysis based on the availability of raw material, the type of output value which is there, and the need for value-added products for the consumers. And based on that, what we did was we clustered them into multiple areas for specialized manufacturing, so that there are synergies and ecosystem benefit. And based on that, what we identified was that FMCG, food and packaged food and beverages, chemicals, downstream petrochemicals, plastics, and then packaging. So these are, and pharmaceuticals, and then medical consumables. So these were the certain sectors which we identify can actually, provide that boost to the manufacturing sector in the country. And then with the Continental Free Trade Agreement coming in into implementation, these manufacturing can not only cater to the domestic market, but also can leverage the AFTA to export products into the other African countries. So there is a strong, window of a strong room for of opportunities for manufacturers to thrive and grow in Nigeria.
Thank you very much. So you sort of highlight key sectors that have the potential to drive growth in 2022, and also the opportunity, created by the exports, within the Africa Continental Free Trade Zone. Let me go to Ineka, right? And I'll write the question this way, and as per what we see within the market, right? The question around how do you really fund growth in 2022? How do you balance this with the regulation that the CBN has given around your LDR, recommendation, or, and the CRR debits, that you get, and also mixing it up with the interest rate environment, right? Where are the opportunities for you from a financial services perspective, and what are the, potential risks, to strong performance in 2022?
Okay, I think, thanks, Segun. I think financial services cuts across, represents everything else, right? So if our clients don't prosper, the corporates don't prosper, the banks will not prosper. So I think, whatever we do stems from what happens in that sector. And I think in terms of opportunities, broadly speaking, I think the whole export space is an opportunity, right? I think it's going to be a very supported sector, both from the fiscal authorities and the monetary. You've seen the recent policy coming from the central bank. So exports will be very much in play. There's a lot of opportunity around that. And, banks, can add a lot of value within that space, right? Stemming from the policies that are coming out. So I think exports will be a big opportunity. I think agriculture is obviously, it has been a focal point of this, administration, and maybe even previous administrations. So that will remain an opportunity. There's also financing that is required in that. It's just that it's kind of tough because it's not very organized. It's highly fragmented and all of that. But ability to play a role maybe with the aggregators and all of that, and leveraging the multilateral agencies and all the other participants. I think that's an opportunity for the economy and for the banking sector. ICT, trade and services, I think Dinesh talked a bit of that. That has been a key driver for the 2021 growth that we saw. Technology especially is a winner. I mean, I think that came up, the ambassador talked about it. It's a winner, and there's a lot in that space, right? The telcos, they're investing in infrastructure, and then all the innovative technology companies that are springing up in Nigeria. That's also driving quite a lot of, and actually having a multiplier effect across the entire ecosystem. So that riding on all that, the banking sector, I mean, there's a lot of banks doing a lot of things in the retail space and, winning with digital offerings. Now we have the eNaira. There's just a lot happening in the ICT space, especially, that will create opportunities for banks. I think the mindset is really about, value add, providing offerings that speak to try to solve or alleviate some of the issues that are in the system, and helping corporates to navigate all the things, challenges that are going on in the environment. So that would always give opportunities.
Thank you very much, Nneka. You essentially sort of lined up all the different areas of opportunities we have in the economy. I'll go to engineer. I'm back to you now. And as you sort of take your earlier comment, I also want to sort of summarize the opportunities that you see within the oil and gas sector and the pitfall we need to sort of watch out for in 2022. Then Ari, you sort of summarized from a macro perspective the opportunities and the downside risk after engineer. Yeah. Engineer, please go ahead.
All right, thank you very much. To address the issue with respect to implementation, of course, the Mr. President commissioned the implementation committee headed by my principal, Chief Team Principal, Honorable Minister of State for Petroleum Resources. And with the doggedness, maybe right now it's not something that's in the public domain. That is serious commitment, determination attached towards the implementation of the PIA. And it will no doubt represent what we call the gold standard of natural resource management with clear and separate rules for the subsectors of the industry. The existence of commercially oriented and profit-driven National Petroleum Company, the NNPC, which used to be Nigerian National Petroleum Corporation, and it is now the Nigerian National Petroleum Company Limited. The other one is the codification of transparency, good governance, and accountability in the administration of the petroleum resources of Nigeria. Now, the other thing I want to mention is economic and of course, the social development of resource host communities, like I did mention earlier on, environmental stewardship. Now, when you look at implementing a huge and best practice PIA like we have, that has 5 chapters, it has 309 sections and 8 schedules dealing with rights of preemption, incorporated joint ventures, domestic pricing, and pricing framework. So following Mr. President's assent, the clock is now ticking on the reform milestones outlined in the PIA. So it's not what we call a magic one thing that will happen overnight. Now, you need to appreciate and realize the fact that, yes, indeed, there was a change required with respect to the petroleum, the fuel subsidy. It's not out of place because certain things need to be embedded to address that issue. And I think I wouldn't want to speak about because a lot of information is in the public domain with respect to that issue. Now, the steering committee, what they're doing that is to see timely implementation and to ensure that the new institutions created under the Act, the midstream and the downstream commission and authority and their bodies have been inaugurated. They've started working. Now, the other thing I want to mention to all of us here is that aside the PIA, there will be a gamut, or if you like, a cocktail of regulations to underpin the operationalization of the PIA Act. And coming back to your question about opportunities, which is the upside, I'll quickly dwell on what the NNPC has to offer. Now, you know that the NNPC is now a limited liability company that has been incorporated pursuant to the Companies and Allied Matters Act as a commercial and profit-focused entity. So the ownership of NNPC Limited is vested now in the Ministry of Finance, Incorporated, and the Ministry of Petroleum, Incorporated, on behalf of the federal government. One thing I like to equally mention, so in a nutshell, what this law has done is to remove all these uncertainties that I mentioned earlier on and bring our law into conformity with the best practices in the world, and also improve our fiscal environment in such a way that investors, when they come in with their money, they're not sure that they will make a reasonable margin operating in the sector. So the PIA will transform Nigeria to a hub of huge business opportunities. It equally promote corporate governance in the oil sector. Now, on the transformational aspect of the PIA, which of course open up a lot of investment and business opportunities on the nation's oil and gas industry, it will help us to have a very transparent and clearly competitive fiscal framework. That wasn't there before, because we were, like I did mention in my opening remark, we were struggling with the outmoded, archaic Petroleum Act of 1969. But what this one with this regulation, we're not beginning to see opportunities on where you can put your money and also get back your money with some benefits. And it will also refocus on gas development, which I will speak to, which is where I sit on our country, such that, as we know, gas is the new oil. Gas is the transition fuel that will take us to the energy transition that we are to reduce our greenhouse gas and of course take us to net zero emission as a country. Mr. President, at the past COP26 in Glasgow, committed to 2060 to bring us to that level. The other thing I want to mention about the PIA, that it will enable the development of resource host communities. So it will not reduce some form of pressure on government. It will boost capacity development in the identified skill gaps. Remember, prior now, as a country, we were focusing only on crude oil. And for our teaming audience listening, what many people don't know, what we say in the oil and gas market, that Nigeria is a country with a tiny drop of oil with abundant gas resources. So we are more of a gas play nation than an oil play nation. Now with the PIA, there will be some form of gaps, and those gaps need to be closed out in terms of capacity building, upskilling of the workforce. So for us, the PIA is certainly a game changer for the whole of the oil and gas industry. So talking about the opportunities, the NNPC now is not a profit-making business. And in a bid to ensure solvency and profitability, the provision in the EIA has crafted to ensure that only sovereign organizations participate in the petroleum industry for purposes of commercialization, which takes me back to your question that you asked. So the Act in itself states that no subsidiary will be funded by government. So NNPC is now accountable to the shareholders. And in that case, it now allows NNPC to form an incorporated joint venture with the international oil companies that are trying to now move to, say, international energy companies. And of course, with other parties to expect to have a strong commercial orientation and transparent company or operations. So for NNPC in particular, which I believe everybody is interested to know, is that it is now incorporated as a limited liability company under the Companies and Allied Matters Act. It will remain fully state-owned, but is meant to conduct its affairs on a commercial basis without recourse to government funds. A key departure from status quo like we know it before. Now, the Act equally stipulates that the NNPC will declare dividends to its shareholders, but retain only 20% of profit to grow each business. Now, this again reflects the importance of oil and gas revenues in supporting government spending, a theme common among, like a practice common among national oil companies like we have in Brazil and in Norway. Now, with the PIA, the NNPC will become most profitable company in Africa. Sorry, I have to use that word because I take it with all sense of pride, as it will provide business opportunities that will enable the company to earn more revenue for the country. And as a result of the new legislation, NNPC Limited will not only shed some of its toxic liabilities, but will be the largest and most capitalized company in the whole of Africa, and potentially the most profitable on the continent. Permit me to also mention that although that will not happen overnight, the major shareholders of the new NNPC are allowed in the PIA to sell shares of the national oil firm to private individuals.
Engineer, are you still there? Okay, yeah, so let me just summarize what he has said and we'll come back to him when he comes back. So he's essentially itemized that there is opportunities within the PIA. He sort of highlighted the point that there's opportunity to attract investment, in NNPC, opportunity for NNPC to give dividends to the Nigerian economy, and potential divestment of some of the investment later on in the future. Essentially, sort of arguing the point that in 2022 and much longer, there's significant opportunity within the oil and gas sector. Let me move back to Ari. If you can just kindly help pull all this together from a macro perspective, what are the opportunities that you see, broadly to drive Nigerian economic growth forward, and what are the potential downsides that we need to pay attention to, and what can we do about those here?
So I'll be brief because
breaking transmission.
Sorry, maybe the engineer came back.
Okay.
Pause. Come back.
No, thank you. I'm still a bit in the dark. This is what you get, right? So I don't know. Should I continue or you want me to pause at this point in time?
Just, engineer, just pause. I'll come back to you in a moment.
Sorry, engineer.
All right. Please go ahead, Ari.
Okay. Thank you. I was very interested in what the engineer was saying, but let me try to summarize, because the opportunity, I think we talk a lot about the opportunities, and I think it's unquestionable that the potential of Nigeria is immense. Human resources, land, fertile, the capacity, the talent, ICT is there for everyone to see. Naira was mentioned. It was the first digital currency in the African continent. So Nigeria leads in many areas. And I think also we heard from the free trade zone what the opportunities could be. So the potential is huge. On the upside, even to our future forecasts, I would say that if we get the Dangote refinery working, there were many delays, but hopefully we're expecting in Q3 or Q4 this year, the operations of the refinery to take place. That could be, if that is accelerated, that could be an upside for the Nigerian economy. Also, let's not forget the African Free Continental Trade Area. To the extent that trade policies, tariffs, and non-tariff barriers can be reduced in Nigeria and in other countries in the region, the scale of operations, and Nigeria is already big, Nigeria could enjoy the other markets in the continent as well for its own production. So this is also upside risk, if you wish. Now, let's talk a little bit about the downside, because there are downside risks and they are serious now. The fiscal position is not very strong at the moment. As you said in your initial words, the fiscal deficits are projected to be high. They have been higher in the past years because of the pandemic. We are now hopefully moving away of the pandemic. The pandemic remains a risk, because variants could actually emerge. They could affect other countries, they could affect Nigeria. So this is a risk in itself. But the fiscal position, you need financing to be able to actually meet those spending targets that are not financed through taxes. So the financing environment is going to be more complicated than it has been. First, the debt position has been increasing. Of course, there are no risks of repayment. Nigeria has a very good track record of honoring its commitments, but with the deficits being high and the needs of financing needs continuing going forward, there will be a time that the debt position will put very strong pressure. We need to be on the record of saying this, that you need to consolidate your fiscal position. And the consolidation needs to be through mobilizing more tax revenues, because spending is very, very low, particularly on social and infrastructure. You need to spend more in our view. So for that, mobilizing tax revenues is of the essence. And the government has a program for that to raise the revenue to GDP ratio by 2025, the SRGI framework, to raise the revenue to GDP ratio to 15%. Now it is about 7.5% to 8%, is to raise it in the next 3 years to 15%. That looks very ambitious, can be done, but for that, there will be a need to raise VAT rates. There will be a need to broaden, clearly to broaden the tax base. So more firms can actually be in the net of paying, complying with the tax procedures. Digitalization, tax administration needs to be strengthened to digitalization and other areas. So the fiscal position is a risk. And I think that another risk that should be in the table, and the Ukraine crisis, the aggression from Russia to Ukraine has brought that to the forefront. The geopolitical environment and the interest rates abroad, it's going to actually create quite a bit of uncertainty. Uncertainty on inflation, because oil prices are high, wheat prices are high, bread prices are likely to be higher. 30% of the wheat in the world come from that region, Ukraine and Russia. And we are seeing already increases in the wheat prices and other commodities. So all in all, in 2022, the international markets are going to be more volatile. There is uncertainty. So conditions are not as favorable because of central banks tightening interest rates together with commodity prices being high. It's not very conducive for a lot of financing, let's put it that way, as it used to be in the past. So something that we need to keep in mind as a downside risk. All in all, the crisis in Ukraine could be beneficial because oil prices are high and it helps growth in Nigeria, but tax revenues are not necessarily likely to be extremely benefited because of the fuel subsidies that also grow together with the international oil price growth. On the wheat, there is some domestic production of wheat. Hopefully that can be stimulated by the high prices of wheat. But in the short term, that will also cause some higher importing costs for Nigeria. I stop here. Thank you.
Thank you very much, Ari, for the comment. And if I sort of summarize what I've heard, from all the panelists, right? The outlook appears optimistic, right? But there are certain dependencies that will determine the realization of a above 3% growth, right? And there are those that we can control, which could potentially be reversed into a shock. But there are things that we can't also control, right? Those are the point. So at this point, I'd just like to then bring all this home, right? To then ask the question. So as the businessmen, that are seated here, so we've seen the potential, right? We've seen the risk. What must businesses do, right, to thrive and survive in uncertain policy environments, in an environment in which we have huge opportunities. In 2022, what should businesses be looking at doing? I'm going to start from Dinesh, right? What should businesses, what should manufacturing companies do in 2022 to survive and thrive?
So I think the manufacturers really have to look down upon certain policy frameworks to leverage these policies to work in their favor. So for example, the recent RT200 program of central bank, I think that's a huge potential for exporting companies or manufacturing companies in Nigeria to leverage that and get 15% additional return on their exports out of Nigeria. So that's a huge, I think, opportunity created. The Continental Free Trade Agreement is another one which allows people to trade freely between the other African countries. So whenever that comes into place, but the operators have to be ready, to leverage on that. And then apart from that, like engineer said, the availability of gas is the biggest blessing, I think, which we have in Nigeria. So using natural gas, I think, to run the energy supplies for the operators in the country, I think we can become internationally competitive. I mean, we operate as Tolaram, which is our sponsor group, 20 manufacturing units, and all of them run on natural gas, either in piped form or LNG or compressed natural gas. And in piped form, the cost of power which we generate is roughly around $10 to $11, which is much lower than some of the international peers. So when we say power is the bane for Nigeria, I think power also is an opportunity if we leverage on the abundant gas supplies available in the country and at the right prices, which are still there. So I think those are the opportunities operators need to look at and encash.
Thank you very much. Engineer Derefaka, I'll go straight to you. From your view, in the oil and gas sector, what must be done by both operators and also regulators to ensure these opportunities in PIA and also across the sector is realized in 2022?
Right. Thank you very much. But just before then, I'd just like to paint a clear picture. The PIA does not bring doom to Nigeria. What it brings is that it brings a house of opportunities. You can call it a warehouse. So for our investors, what this means is that there is clarity of our physical environment. There is also a very robust commercial framework. There is also a competitive physical framework. So the combination of these three to new investors and even the existing investors is that they can now take opportunity of the industry. And as you may know, a friendly business environment will guarantee cost recovery and a decent return on investment for investors. So the combination of this is that NNPC, like I did mention, is now the warehouse for a lot of opportunities. So let me digress a little bit and talk about what gas will do. Like I did mention, we have oil and gas, but we are more of a gas play than an oil play, and we just have a tiny drop of oil as a nation. So with respect to the PIA, it will boost our nation's economy through gas utilization and revitalize the gas sector, both local and international. Like I did mention, the domestic gas infrastructure deficit will be addressed, and of course, the market will be there, because gas can cut across different segments: the manufacturing, the cosmetic, the pharmaceutical, the agricultural sector, all of this. I can speak to each and every one of you seated there that 80 to 90% of what you're having in and around it there comes from gas. So while gas demand and corresponding incentives have been steadily increasing for several decades, we believe that the PIA will shape the landscape to an unprecedented level of creating an enabling environment for new investment in gas development and, of course, domestic commercialization to enhance our huge untapped gas resources. So what this PI will do in terms of opportunity is that it will foster the development of critical infrastructure and enhance the utilization of gas resources for national development. The AKK gas pipeline that is going up north will serve as a backbone to spring up hitherto moribund industries up north. And then we will now have what we call the virtual pipelines that will take gas to different segments and different locations. Presently, there is a company called Greenfield LNG. Through a virtual pipeline, they are moving gas from somewhere in Rumuji in Port Harcourt up north and to other industries, and that has now sprung up different manufacturing companies there. Today, what gas can do for us as a nation is that it will now spur and serve as a resurgence of our socioeconomic business. And if you look at what gas does, it is what we now, as a government, is based on the challenges with CO2 to have much less CO2. So the deployment of natural gas as a bridge fuel and as a key resource for a just energy transition is our national priority, which is why in 2020 we declare the year of gas. Now, considering what we've recorded and the successes recorded with the LNG Trade 7 that took FID, the brass fertilizer that took FID, that will equally bring a lot of methanol, which of course is one of our daily activities. What gas is going to do is to make sure that it now takes care and fits into all the credentials of the UN 17 Sustainable Development Goals. So for us as a nation, all these assertions are remarkably significant because we are now on a long-haul flight on the wings of gas. We've dwelt too much on crude oil. Have in mind, I'm not saying we are shifting 100% away. We will still be in the oil and gas business, and which is why, as a result of our declaration of 2020 as the year of gas, and what we've done, the federal government in its wisdom said, we need to do more with gas. And so we declared January 2021 last year to December 2030 as a decade of gas development in Nigeria with the goal of industrializing Nigeria utilizing gas. Now, we intend to take advantage of this opportunity. Why? Gas production and use is now a huge benefit because it will spur economic growth, it will enhance the energy mix, it will drive investment, and then it will offer much needed jobs for our citizenry. So a lot of jobs will be created. 37 LNG alone is going to create about 15,000 jobs, both direct and indirect, and even more. So the benefit of natural gas are well documented because it is flexible, it is affordable, and of course, reliable, and it's a cleaner fossil fuel, even as we transition to a net zero emission as a country in line with the UN FFC requirements at the Paris Club. So back to the Decade of Gas initiative again, I'm trying to wrap up now. At its core, the Decade of Gas is about, one, we need to have a roadmap, and then of course, to have a strategy to underpin what the letter of the Decade of Gas, what the National Gas Policy, and what the PIA has provided. Because have in mind, without the PIA, a lot of these things would have come to play. And as most of you will recall, last year when we declared the Decade of Gas, Mr. President, during the inauguration, teamed it towards a gas-powered economy by 2030, which is embedded in the National Gas Policy of 2017. So, ladies and gentlemen, if you look at all of this thing, the Decade of Gas is equally a decade of elimination of gas flaring. I'm sure we all know what gas flaring does to us as a nation. As a country, today we are flaring around 610 million scoops of gas per day on a daily basis. Now, what that means, if you translate that, let me put that into context. Today, give or take, our power generation is around maybe 750 or 780 million scoops of gas per day. And yet we flare this gas. So what the federal government is doing is saying, no, this is not acceptable. We've shifted the goalposts of gas flaring for a long time, but this time around, we're going to commercialize that gas. And that is what government is doing. So what that will do is that in terms of GDP impact, it will bring in over $1 billion annually to government coffers to build infrastructure, maybe hospitals. And then the other bit is that it will create 300,000 direct and indirect jobs when we start this gas flare elimination. And then the Decade of Gas equally is a decade of domestic liquefied petroleum gas and a decade of fully gas-powered economy. So you cannot miss all of this, and which is what the national gas policy has provided. So as a nation, natural gas is power, it is energy for us, it is transport as in autogas. When the autogas initiative that was commissioned by Mr. President for our gas to run on dual fuel, petrol and gas. So you can convert your car to run on gas. Then gas for us is petrochemical. We serve as feedstock. Gas is manufactured, and I've talked about our textile clothes that we're wearing there come from gas. 1890.
All right, thank you, engineer. Let me cut you short at this point. I think the key message is outstanding. It's a decade of gas, and it's starting in 2022, and we're going to be seeing a lot of opportunity within the gas sector. Started 2021, but it's eating up in 2022. Thank you very much. We're wrapping up the panel. Nneka, I'll go to you to just share some thoughts, right? What are you doing within the financial services sector? What for you to really thrive, within this balanced outlook that we have for 2022? What should we expect? What will you recommend for organization to take as action, for 2022?
Thanks. I think it's really for organizations, for the corporates to, what we're doing essentially is helping the corporates to navigate the environment as it relates to financial services. So I think from the corporate point of view, the focus is really to basically access pragmatic and effective solutions that help to mitigate and resolve the issues that are there. Okay. And, essentially that's really what it is. And that's what we're partnering with them to do from our own point of view. And that's what I expect other players to be doing, because there are lots of headwinds, right? But there are also some solutions, smart solutions that you can leverage to navigate. I mean, obviously things like foreign exchange and all of that. What do you do in the short term and things like that? So it's really to have a pragmatic approach, so as to continue, because there, like we've already said, there are considerable opportunities in the economy, right? So it's really, the headwinds are there on the other side. So it's really navigating all that, partnering with your financial partners and trying to navigate all that. We're doing a lot of that, obviously, as our own firm.
Thank you very much. Ari, you wrap up this panel by just summarizing for us from your point of view, what must government do? What must businesses do? And to ensure we have an outstanding, growth trajectory for 2022.
I will thank you for this. I'll be brief and humble because I think business know better what to do than I can actually suggest. I think what I try to say here from our perspective is that, yes, the opportunities are there. Nigeria has huge potential, but under the policy framework that we have at the moment, it's going to be hard to take advantage of all this potential. Issues like foreign exchange shortages, access to finance, infrastructure gaps, all these will have a negative bearing, of course. And some of these can be resolved immediately. Some of these will take more time. We think actually that the policy framework should change. More tax revenues, less dependence on financing, more availability of foreign exchange by allowing the foreign exchange market to look for a more clearing rate for the exchange rate. So we have lots. If you just take a look at our Article 4 consultation report that was recently published, we offered our views there on policy reforms. I think the only thing I would say is that risks are there. So businesses typically would like to be able to have a sweet return to compensate for those risks, taking advantage of the huge potential of the economy. If business can identify prudently investments that will actually compensate through higher returns the risks that are there. Some, as you well said, created locally, some that there is little control of. and a lot is happening outside Nigeria that Nigeria will have to handle, particularly financing costs that are going to be higher. I think that it will be an exciting year, and we are all hoping for a positive year, that growth can actually materialize at higher rates, and the momentum is there. The momentum has been generated for growth to continue. So let's hope that policy changes and prudency on the fiscal side, but also with investors, they can actually mitigate with wise solutions, pragmatic solutions, some of the headwinds, and then actually make this economy grow and prosper, as it's the objective of everyone. Thank you.
Thank you very much. Before we take questions, which my colleague Uzo will lead, so if you sort of listen to the conversation, I'll sort of summarize this way. The opportunities are in abundance, right? And also there are barriers and risks. So every businesses must, find a way to navigate the difficult environment. And I'll just then wrap up with the presentation I made earlier on. If we just if we listen to what we've said, these are mega trends. Just think about the global pressure. Think about policy implementation, which we talked extensively about. Think about what's happening within the FX and monetary, policy environment, right? Those are the factors that will really shape, the outlook for 2022. At this point, I'll invite Uzo to take questions that we will get from the audience and from the online audience.
We have Professor Dr. Bongo
Please, is that fine? Okay. Okay, Uzo, do you want to?
Yes. Thank you, Segun. And I think our panelists deserve a round of applause, please. Okay, so we're going to do it this way. We have just about 15 minutes to do this. So we're going to take questions first from home. And then, of course, I'll go over to the chat box here and take a few questions as well. I saw a few questions come in while the session was on. So keep your questions very brief, and please keep the response also as brief as possible so that we can, maximize the time that we have. So if you have questions, please just raise up your hand. Okay, so I can already see 2 hands. I will take the 2 hands now, and then can I have another microphone if you don't mind, so that we can, yeah. Okay.
Thank you, Mr. Segun. My name is Chief Grover. I work for Grover's Hospital, and I represent medical and healthcare industry. My question to the panelist is related to the healthcare industry. We heard your presentations and your comments, but majority of the interpretations came from the manufacturing sector or tech sector or banking sector. We did not hear much that what are the growth opportunities in Nigeria in the medical or healthcare sector. And if there are growth opportunities, what are the imperatives or what are the initiatives which federal government or state governments are taking to create more investments into this sector, to create more job opportunities into this sector, so that we can stop the outflow of Forex, which is happening in Nigeria for many, many years. We all know many of the Nigerians, they travel out of Nigeria for even simplest of the simple surgeries, and we lose billions of dollars. So what the government is doing to stop that, and what are the opportunities to create more growth into healthcare industry in Nigeria? Thank you.
Yeah, thank you. Good morning. My name's Stanley Evans. I'm the chair of the British Business Group. We've got circa 900 members here, and I thank the ABC for inviting me along as a guest this morning. I think Dinesh alluded to manufacturing here and the necessity and imperative of putting manufacturing forward. I wanted to make a couple of observations in relation to it in terms of feedback from our membership, which is quite wide and diverse. The first thing is that 3 of our members set up manufacturing or assembly plants for vehicles in one form or another, motorcycles, commercial vehicles, etc., new vehicles. If I take India as an example, I lived in India for 7 years prior to coming here 6 years ago, and I was in the automobile industry. And India made an active decision to penalize anybody that was importing new vehicles. So they progressively raised their import duty from 71% to now 290%, which means that India now is the 4th largest manufacturer of vehicles in the world. The largest manufacturer of vehicles in Africa is South Africa. Here, 11 months ago, the import duty on new vehicles was 70%. And if you manufactured or assembled here, it was 10%. So there was a huge incentive to assemble here. 11 months ago, the government reduced the import duty on new vehicles to 10%. So now there's no point in manufacturing at all. So it's an observation for the panel that if we're pushing forward manufacturing and trying to create jobs in the assembly and manufacturing sector, there's no point any longer. The second observation is 2 of our members, one of them makes paper products and makes 87% of all paper for West Africa. None of it can be exported through the ports because of the difficulty of getting to the ports and then the difficulty of negotiating the peculiar and particularly relevant to Nigeria problems at the port. Another one of our members manufactures glass bottles and he exports none of them via sea. All of them go by road, again, because of the difficulties here. So how would you help us overcome those difficulties? Thank you.
Okay, interesting. And I'm looking at my panelists and I'm saying, tough questions for you, right? Nick, I will throw you under the bus first. I would like to ask, are you funding the health sector? Let me bring it home to you. We didn't say so much about the health sector, but are you funding the health sector?
Well, I think
you see opportunities there.
You're really throwing me under the bus. You are. I think the short answer is no. And the reason is that it's not quite bankable, right? The bank is not a charity organization. You give money out in order to get it back. And for the same reason that there's not a lot of money, right? Affordability is obviously a big issue. We don't have, everyone has to pay for their healthcare, and they don't necessarily pay for it. They either go, majority of the people have to go and go to the chemist and get medication and all that. So until we have like a medical insurance, I know the HMOs have done a little bit, but it's still a very far cry from what is required. So until, that affordability is there and people are able to, through the insurance systems and things like that, are able to pay for the healthcare that they're consuming, then there's a big gap. So there's quite a big gap from the desirable state. And I agree, it's a very important, in fact, COVID was a rude awakening for all of us, where even the people in authority could not get abroad like we would normally do. A colleague of mine, just before the pandemic, was shocked. Somebody from Kenya, was shocked that Nigerians, for checkups and things like that, would go abroad for those things. But that's just what it is. I think there's been some investment. Some people have tested out and done some things, but almost like charity, right? Those things are not really, the economics don't really work. Okay. So if the bank has to get involved in financing it, the economics have to work. And thanks for putting me on that bus.
Okay. So, okay, you want to respond to the pod question? Okay, I'll come back to. So the point is, the investment is there. Just to respond to the headset. Just hold on. If the investment is if the plans are right, if the economics speak, the banks will fund. But until we can get that all checked out, and the banks will not fund. So that's the short answer. If I can help you, I haven't thrown you under the bus. Okay, just before, you want to make a contribution to the health?
Yes.
Yeah, but keep it very brief, please. Very brief.
My name is John Oseji.
Okay.
Director of Policy Advocacy, Nigerian Investment Promotion Commission. On the issue of the health sector, I will confidently and gladly inform us that government and the private sector are addressing the issue. 2-3 weeks ago at Marriott Hotel, Ikeja, the comprehensive incentives for the health sector was launched, and it will take care of infrastructure development, it will take care of funding, and all that all the stakeholders are expected to do and know are embedded in that incentive policy that was launched.
Okay.
So the first phase has been done. Stakeholders were invited, they've made inputs. We are working on the final stage before it will be nationally launched to take care of every fear in that sector. We believe that it will address even funding from the banking sector. We are aware that it's not supposed to be only just charity, maybe for charity, it's supposed to be for profit making, both for pharmacies, all sectors have been taking care of that because NIPC have been very much involved in it. So I can confidently tell you that.
Okay.
Thank you. I was there too.
Thank you. Thank you very much. And I understand that you're on the second panel. So maybe when we get there, you can do a lot more justice to that conversation. Okay, please, let me give you this.
So to respond to the question on the port logistics, right? So we do understand, right? That's a huge problem from an export promotion perspective. And what we have done within Lagos Free Zone is to create something which Dubai did, which is the Jebel Ali Free Zone with a port integrated. And Jebel Ali today does 20 million containers against 1 million container which Nigeria handles today. Now you compare those numbers with Ghana, with a population 1/7 of the size. Ghana does 600,000 containers. So there is something about it, right? The port logistics have an important role to play. So what we have done in Lagos Free Zone is to integrate the entire complex, the industrial complex, with a deep sea port, which is one of the deepest drafts. So which means the largest of the vessels can actually ply on Lekki Port. So that port will be operational by end of the year. So I'm sure that the members of your organization can actually benefit from this entire ecosystem we have created in Lagos Free Zone.
Okay, thank you very much. Very quickly, we're going to take just one question from the chat room here. And that question is directed at Ari. He says, thank you for the excellent session. It's clear that the retention of the fuel subsidy is fiscally unsustainable. However, Nigeria is not the only country to find itself in this difficult situation and finding it difficult to phase out subsidies, whether for oil or for wheat, and had struggled to phase out subsidies. Does Ari have any example of countries that have successfully phased out subsidies that they can refer us to? Countries that have phased out subsidy and perhaps how they did it? Because the resistance is so much. If you've enjoyed something for so long and all of a sudden someone says no more. So give us examples if you have.
Yes, first to say that this is a difficult question, really. And in many countries, there have been quite a bit of difficulty of removing subsidies, particularly those that are universal and not well targeted to those who mostly need the subsidy. And I think we are discussing some of those subsidies with the fuel and wheat. I have examples that, in fact, I've seen in Mozambique, a previous country I worked, Egypt. There are other examples where they were removed. In some cases, they are more gradual removal. In some other cases, they happen all the way. But what is all important in the successful cases is to do prep work really seriously, meaning there must be a very, very strong consensus building in the country to actually remove subsidies. Everyone needs to understand why this would be useful, because it's a situation that if you do it, you have enough funds to compensate those who really need to be protected, and you still have a surplus. So it's really a question of explaining this in simple words, protecting those who are genuinely in need because of the removal, and get the right consensus with public relations, strategy, and do the prep work well, So this can be can happen. Now, easily said and done, because typically in those situations, there are lots of vested interests that benefit from the situation. So you really need to make sure that those vested interests can be appeased somehow to the benefit of the entire country. And so transparency, good governance, making sure that those vested interests can be dissuaded, I think are critical in this process. Those who are winning, those who are losing, and that it's difficult for the country to get a clear picture, but it needs to be done because it's the right thing, because the idea is really to protect those in need and not everyone. And also it's a question of social contract. In subsidies and taxes, you need trust being built between those who need to pay and those who need to provide services. So I heard some of the questions on governance, on issues on the customs and ports. We actually have published a paper showing that non-tariff barriers in Nigeria and Ethiopia are the highest among all emerging economies of non-tariff barriers. Barriers that are put, for example, to expediting the export of a particular good. So unless these things are taken seriously to really remove those barriers, strengthen governance, transparency, it's going to be very difficult for Nigeria to really make the leap that we all want Nigeria to do. So subsidy reform is also part of the challenge to really make sure that the vested interests can be managed, if you wish. Thank you.
Okay, thank you very much. And thank you very much, panelists. Unfortunately, time is not our friend, and we still have a second panel session. So we have to really stop this here. I have a few more questions, but I'm sure we'll find a way to get answers to those people so that we can take.
Can I just add one more thing, please? Let me just add something here. Can you hear me? Just very quickly. Very quickly.
30 seconds, please.
All right. So I appreciate that question about the health sector. And just for our information, there is a national development plan from 2021 to 2025 that addresses the issue about the health sector. And there's an estimated public investment to the tune of 1.65 trillion naira from 2021 to 2025. So, and it has about 4 or 5 thematic areas. It has development of an integrated healthcare model, extend universal healthcare coverage, ensure availability of essential personnel, medicine and supplies, and of course, promote healthy habits and lifestyle. So all of these thematic areas have their different timelines, key performance indicators, their baseline, and of course, the strategies to addressing all of that. And I think the only lady in our midst that you put through in the bus wasn't fair, and she did a good job. So the thing is that there is a provision for it, and thanks to the gentleman that gave some insight in that regard. Thank you.
Thank you. Thank you very much. Thank you very much. So we'll take a 5-minute break now, and then we'll come back for the second session. And a round of applause for our panelists and moderator.
Lagos Free Zone, the first private free zone in Nigeria with a fully integrated deep sea port, is an ideal location to serve the demand centers in West Africa, home to about 350 million strong consumer base. LFZ is well connected to all major cities in the hinterland by road and by air. We are located 65 kilometers east of Lagos metropolis along the Lekki Corridor, the Sunrise Development Corridor of Lagos State, fast consolidating itself as the engine of economic growth in Nigeria. Uniquely integrated with Lekki Port, the deepest seaport in the region, Lagos Free Zone unlocks deeper reach to local and international markets. Sustainably developed as the premier investment location for varied businesses, LFZ is an ideal destination for manufacturing facilities due to its strategic advantage in enabling easier access to critical success factors such as land, world-class infrastructure, and an unwavering commitment towards enhancing the ease of doing business in Nigeria. Investors in Lagos Free Zone benefit from the conducive and hassle-free live-work-play environment. Amenities such as housing, hotels, parking hubs, communications infrastructure, power station, medical facilities, and leisure centers are provided and maintained so that you can focus on growing your business. In addition to the enabling environment for growth, investors at Lagos Free Zone enjoy a host of fiscal benefits and preferential policies backed by the federal government of Nigeria and the Nigeria Export Processing Zones Authority. These include various tax benefits, import duty exemption, unrestricted access for skilled workforce, and tax-free remittance of profits and dividends. Lagos Free Zone is a world-class industrial zone carefully planned with state-of-the-art infrastructure, services, and facilities to help your business thrive. We welcome you to Lagos Free Zone, your gateway to a new frontier.
Thank you and good morning. I think we're still in the morning. Ladies and gentlemen, it's a pleasure to be with you today on this very interesting. So I'm going to continue from where the first panel ended, which is we want to be optimistic this year. So let's continue on that very positive note. Although towards the end, something came up, which is on import duty on cars that was reduced at a point. Then all of a sudden it was increased. It was increased at a point, which made it more, conducive to manufacture, produce automobiles here in Nigeria. But all of a sudden it was now, crashed. So making, undermining investment that are already coming and then jeopardizing jobs and all the other things that have been done. So those are kind of things we see in Nigeria. But at the same time, we have seen some stability and some firmness in certain areas. Some reforms have taken place with respect to investment, and I'm happy that on this panel will be the representative of the the director of the Nigerian Investment Promotion Council, Mr. John Oseji. He's the director of policy advocacy. So please, may we welcome him to the panel. Yes, Mr. Oseji will be taking on the issues of investment reforms. What are those things that the government has done? He has started talking about the health sector reform. So we want to hear more about other things that the government has done recently, especially in relation to the newly passed, I think, the National Development Plan that will go from 2021 to 2025. Then I also have with me on the panel, Mr. Alfred Olajide, the country manager and VP Coca-Cola Nigeria. I met him last. He was on one of the panel with the Minister of Finance during the last Nigeria Economic Summit in Abuja. I listened to him, quite energetic, highly informed, highly traveled. Please, let's welcome Mr. Alfred Olajide. Thank you. Okay, I also have two other members on the panel. Ms. Nonye Ujam, who is the government affairs lead Microsoft. She will be looking at the tech sector, startup reforms and the implications that will have for businesses in Nigeria. She will be joining us online virtually. May we welcome Ms. Nonye Ujam. And then last but not the least, I have Chris Ebiware. He is the country manager, Renewvia Nigeria. They're into solar energy. So he will be dealing with the renewable sector as well. Welcome, Mr. Ebiware. Thank you. All right. So I think that is it. We will make this panel as interactive and spontaneous as possible. I will start with the Nigerian Investment Promotion Council, NIPC, Mr. John Oseji. I would like him to set the floor rolling, by giving us the recent reforms that the government has embarked. Let us hear from the government, from the horse's mouth. Thank you.
Thank you. Thank you, Doctor. First of all, I want to start from here. Like we normally say, if you want to do business in Nigeria, please talk to NIPC first, so that will make it easy for you. So I want to start from there. The government, federal government, has been carrying out a lot of reforms in the last 5 years. Like it was observed during the first panel, the impact has not been so much felt, but the reforms have been ongoing. First and foremost, there have been administrative processes that have been taken. The directive trying to restructure the public sector, the civil service, with the executive orders that have been issued. They are sort of like Executive Order 1 is very, very important to us because many government agencies are now complying. That order tends to bring sanity, transparency, efficiency, and so on. And the order allows you, if they don't attend to you within the stipulated time, to flag it, to raise it up and raise an issue out of it. And government will look at it. So for us, it's a major issue for us that government has brought that one out, because for now, we also flag it. If you're not attending to investors, we can tell you Executive Order 1 will apply. Then the CAMA, that's the Companies and Allied Matters Act 2020, addressed so many issues, has made the issue of administration and management of corporate entities easy, and also has made registration or formalization of the MSMEs also very possible. And so many other issues have been addressed in that CAMA. And the various finance acts, 2019, 2020, 2021, also address so many things. I may not be able to give you all the details, but we do know that many of them are reforms to reform some of those macroeconomic issues. Then we also have this recent National Development Plan, 2021 to 2025, that is going to address a lot of issues. The plan is there, the strategies for implementation, the likely challenges and how to address them, they are all embedded there. And also we'll look at NIPC Act itself is a way of addressing some of the issues, because NIPC Act allows investors to invest, and NIPC as an agency has been doing a lot. That's why I started with that statement that if you want to do business in Nigeria, contact NIPC. We have the one-stop investment center that facilitates business registration, approval processes at the point of entry. And we have gone beyond that. It's now automated. We've done the first phase of it. We'll now call it EOC. You can do business registration, any foreign company that has any interest, even as low as 1% supposed to register with NIPC. You don't need to come to NIPC physically to do that. You can register from the comfort of your office. We also have the OSIC lab that is a mechanism, dispute resolution mechanism, wherein we bring in investors that are having challenges with any government agency. We'll bring them to a table, bring them to a particular place and say, look, state your issue before the agency. The agency will be there, the investor will be there, and NIPC will be there. State your case, and we expect the agency to tell us why the investor's challenge cannot be addressed. So there's so many things to say. Let me stop at that.
Okay, all right, thank you very much. Yeah. Yes. I'm happy that you mentioned the tax and the Finance Act 2020, 2021. Okay, so we have that now operational as well as the tax. So let me go to Mr. Olajide to take on the Tax and Finance Act. What are the opportunities for businesses that you see as a key player in the FMCG sector? You know, what we see in Nigeria, we have the problem of revenue. That's what we often hear from the finance minister, your friend. She said that we don't have a debt problem. what we have is a revenue problem. And that revenue problem, as the IMF lead also mentioned earlier, comes from our inability to, boost our internally generated revenue. That's tax. Corporate income tax, CIT, for Nigeria, is among the lowest in Africa. Yeah, I know that tax efforts generally is quite low, but CIT is very, very low, like 1%. So many firms do not pay tax. They do tax planning, tax evasion, but now government has given a lot of incentive to them, bringing a whole lot of items into the VAT exempt list and all of that. How do you see that affecting corporate performance? And of course, motivating firms to voluntarily and happily comply with taxation?
Yeah, thank you so much. So allow me to also lend my voice to the perspective on where the economy is, and I mean the context for the business in Nigeria. I think a lot of all the speakers in the previous session, they've kind of alluded to the fact that, as someone I know would say, Nigeria is like an athlete that has potential to actually run at a very high level of speed, but it's been malnourished over time, that the current state does not speak to the potential. But, I think the potential was also demonstrated in the recovery that we saw from COVID. And I think we talked about it. Ari said it was a pleasant shock. Typically, many projections, talked around 18 to 36 months for an economy to recover. But we seem to be, doing a lot of that within a very short period of time. So I think that speaks to the potential. However, I'm not seeing the development being inclusive. All the statistics you read out in the morning, unemployment is more than 20%. Average inflation is still about 17%, even though, yes, it's tapered down at some point. It's just not inclusive. And these are indicative of structural challenges. Somebody mentioned earlier on, global oil prices are going up, but it's a problem for Nigeria, because the best case scenario is a net zero, where you get more, but you also spend more, right? So a lot of effort, to Mr. John's point here, has been put to by government, right? Efforts to improve businesses coming in, bring in Forex and all. And specifically, my personal opinion here is that we've done a lot of work, but there's still a lot more work to be done. I am not so sure that we have a policy issue in the foreseeable future. I think it's going to be about the hows of executing what we have that is able to provide win-win situation for all stakeholders. So to your point, we have the Finance Act now, which seeks to extend the tax net for the government, and also plug some of the loopholes that people or companies could be more aggressive on, in terms of all the provisions in CETA and all. So if you look at the combination of what the government is trying to achieve with the Finance Act 2021, you will see that it's a combination of direct taxes, which would bring more, but also some indirect taxes, particularly the notable ones on the excise introduction on carbonated soft drinks, which I have my point of view about, and I think I'll use that more to describe the implication for businesses as we go forward. But overall, you can see the intent of the government being demonstrated in the tools that have been put out. So, and this is what we've been, the industry have been advocating with the government. Instead of taxing the 1% and continue to tax the 1%, how do you make sure that you tax beyond the 1%, and then you democratize tax payment, and hence we can get more revenue? So very good development in the right direction. So I think for me, If I speak like an FMCG practitioner that I am, and I'm going to use that FMCG experience to really address your question on the implication. I think there's an opportunity for better partnership. So if you look at the food and beverage segment now, it contributes to about 30% of the total workforce in manufacturing sector. Manufacturing sector in itself, I mean, is a significant contribution to GDP, you know. We referenced it's 5% actually, but it is, I mean, to your point, if you look at the composition of growth in the 5-year plan, you would actually see that manufacturing is expected to lead all the other sectors. I think the figure is about 10%. So it means that the government is also taking a bigger bet on manufacturing. So, I mean, all these points are just saying that it will continue to be the way it is. Okay, good, check. The next thing then is, with the current situation, introduction of additional taxes. What does it do? Many of these companies are already battling with high costs of production, high overheads, security, utilities, and all. Many companies are not in the state where they can absorb this. So what then happens is that they tend to pass the cost to the consumer. On the other hand, the consumer is been facing 17% inflation rate. Okay, now again, Ari said in the morning, grain prices will go up. Hopefully we don't have a net negative effect on the price change on oil. But what it is, any spike in inflation also means that the consumer would have lower disposable income. And then what happens? Demand falls. When demand falls in the manufacturing sector, then they get less CIT, to your point. Then they have less profits to pay the shareholders. Then they reduce investments that come, and then. So question is, how will the government partner better in the implementation, right, of these policies and these acts, such that it's not a win-lose, it's actually a win for everyone. Manufacturers are able to continue to grow, government is able to continue to expand revenues, and the consumers are also happy. So I will come back at some point in time. Thank you.
Thank you very much. I think that ended very well. So stakeholdership, partnership, yes, and that is something I see. I don't know, but somehow it seems to be lacking, because sometimes it's kind of top-down approach that we've always been accustomed to. You're here, I'll still get back to you. Now, let me go to the lady amongst us, Nonye Ujam. You're the government first lead for Microsoft in the tech sector. Recently, we have the startup bill. Has it become an act here? No, it's still in that level, but we've seen a lot of activity, dynamism in the tech sector. Let me start with the fintech. When we look at what do you call them? The ones that have scaled 1 billion capital, the unicorns, right? So Nigeria seems to be overrepresented when it comes to Africa. Okay, the bulk of the tech hubs also in Africa, concentrated in Nigeria. A lot of things are going on, but I know that we still have basic problems like we don't even warehouse our own data. And because of that, we can't commercialize. So you're in that space. What do you see? What are the opportunities? What are the constraints?
Thank you very much, Dr. Bongo. And first of all, thank you to ABC and the sponsors for the opportunity and this platform to lend my voice as a worker or a practitioner in the tech sector to these discussions. First of all, I'd just like to give sort of an overview of the tech sector and technology as a whole. We know we all live in a globalized world, and one key imperative for doing business is the ability to transcend borders and transact with ease, regardless of what sector that you play in. And technology is the key enabler for driving this and making this happen. This is why multinationals and companies like Microsoft, and of course, I have my colleagues represented as well in FMCG and the other companies, we need to provide sort of like the necessary technological and people support that can help government to achieve, its agenda. However, I think a lot rests on the back of government. Government needs to take responsibility for creating an enabling environment and building sustainable systems that can allow players like us operate successfully in this space. With regard to the opportunities, and I'll speak specifically in the tech regulatory industry, two bills, which is the startup bill and the data protection bill. And these are very welcome advancements with regards to regulation. First, the startup bill. And what this is meant to do is provide an enabling environment for the establishment and operations of startups. It's supposed to foster development and growth of technology-related talent. So that's the people investment that I spoke about earlier. And of course, position Nigeria's startup ecosystem as a leading digital technology hub in Africa. And you've just alluded to that, Dr. Bongo, in your statement about the sort of investments from venture capitalists that Nigeria is attracting. Then we have the data protection bill, which sets out a regulatory framework for the protection and privacy of citizens, our data, covering things like processing, transfer, storage, and disposal of data, which is critical, really, because when you think about the protection of citizens, the rights that we have under the Nigerian Constitution, then it's important that we ensure that citizens feel protected, because that's the kind of trust that you want to build. You also talk about establishing a commission that will oversee the affairs of the data protection space. And of course, going into what happened I think this was last month, where a data protection bureau was established. And this, again, a welcome development. But I'd just like to touch on something that my colleague from Coca-Cola mentioned, and that is the implementation. We have fantastic policies in Nigeria, absolutely great policies. I think what is lacking is the implementation aspect of those policies. And I think that's where there needs to be a real focus on. Without meaning to take this as a way to showcase some of the things that Microsoft is doing, but I'd like to touch on them because it's important to mention.
There's no harm in doing that.
I'd like to touch on them because it's important to mention. So we've been here for over 20 years now, and we've made significant contributions to the Nigerian economy from our perspective, and hopefully from the government's perspective as well. In Nigeria, SMEs account for about 96% of businesses. They constitute 84% or so employment, and I think over 47% or something like that to the nation's GDP. So you can see that that's really a bedrock of the Nigerian economy. So a lot of work needs to go into that. We provide digital skilling initiatives that target jobs for employment, but not only for employment, but also for entrepreneurship. Because I think is where we really, really need to hone in on, where we can sort of help government to strengthen the work that they're doing. And I think these will help to reinforce the country's position in Africa as a digital hub, which you alluded to, Dr. Bongo, and also support the implementation of very important agreements like the Africa Continental Free Trade Agreement, which reports have said are expected to grow Africa's GDP to over 3 trillion, making Africa the largest free trade area in the world. But specifically on digital trade, I think it's important to note that about 1% of the e-commerce market space is responsible for over 60% of the marketplace traffic on the entire continent. And this is very, very instructive. And it is instructive because it means that there's a lot of work that needs to go into cross-border trade. There's a lot of work that needs to go into opening up the borders such that within the continent, at least initially, we can trade easily. We can begin to liberalize trade. And the agreement is there for a reason. We're at the stage of implementation now. So what can we do to make sure that we, first of all, the private sector is able to participate meaningfully, and also we can support government in their efforts. We're talking about policy reform and enabling the private sector to thrive. And these issues cannot be overemphasized. For instance, Nigeria with the digital transformation agenda, which the private sector can help to accelerate tremendously if we're engaged effectively. And I said again, and I'll say again, the issue of policy implementation, that's where we really can play a very critical role. I'll just end with 2 points. Nigeria has a largely youth population. Apologies. Nigeria has a largely youth population, and we have to harness the power of technology to engage youth across all sectors. Every sector of the economy needs technology. And how do we do that to boost economic growth and development for the country? Those are the kind of issues that we should be discussing. Beyond this, how do we build trust with government? How do we keep the communication lines open so that we can engage meaningfully, so that we can discuss these issues, so that we can lend our voices to the work that government is doing, so that we're not sort of blindsided, so we can come together and see what will be beneficial for the country. I know that there are a lot of discussions around when we talk about multinationals and private entities and how we're established to make a profit. That's the reality. We are established to make a profit, and that's I think the lady from the other panel did mention that. However, I think it's important to note that even in the countries in which we operate, we have citizens of those countries that have at the top of mind to ensure that our country grows, our country is able to develop. So the point I'm trying to make is that we're available for these discussions to happen, and we're here to lend our voices. So I'll stop with that for now. Thank you very much.
Thank you very much, Ms. Ujam. That's very interesting. I'll come back to you on a number of points you raised. And I like the thing you said, in response or reaction to the last session, where we had, the lady at the extreme said from Citibank that once the economics are not right, so there is no incentive to invest in the health sector. But you are kind of challenging that. And that speaks to corporate social responsibility. You ended up there. Ms. Olajide also ended up with corporate social responsibility. How do we support government, or how do we partner government to ensure that we protect the consumer? Because eventually, our own fortune as businesses will depend on the capacity, the purchasing power of the final consumer. If the consumer has no disposable income, we cannot do business. So it's important for us to realize that, not to set ourselves up and wait until when the economics are right. Thank you very much. So let's go to the renewable sector. Mr. Chris Ebiware, the CEO of Renewvia. Yeah, so what do you see in that space? That's quite a new one. We are in a net zero world, right? So pushing away from non-renewable energy sources. So you are in the renewable space. What are the new things that we need to know, and how can businesses take advantage? I hope you have you unmuted yourself, please? We still can't hear you.
Wow.
Okay, try again.
Yes, can you hear me now?
Yes, we can.
Okay, good. Good morning, everyone. As you said, renewable energy is quite new. Way back 10 years ago, everyone will be wondering, when you say renewable energy, the only thing they can think about are small solar panels that we use maybe for phones and stuff. But even now, some people still don't understand that it goes beyond your solar street lights you have on the streets, which are implemented by government. We came into the space, the federal government did a very huge research on how renewables energy can help, most especially the energy sector, in providing power. As we know, power is a major problem in the country. Everyone wants access to power, 24/7 power, but it's difficult. And the truth is, it's expensive. It's not cheap. But the government had a very good initiative. So they gave a whole lot of power to the Rural Electrification Agency to go to the rural areas and electrify the rural areas to see how the raw materials that can be manufactured where they are being sourced in the rural areas. So we now have different programs by the federal government in the rural areas to provide power. And when we came in, we had a study, because no one just goes into any business without trying to find out, any new business, by the way, find out if it's viable, if it's going to succeed. So the USTDA did a whole lot of study, and they called us Renewvia. We did a feasibility study for over 25 communities that are over 5 megawatt water power. And we found out that this is something where we can look into, because it was untapped, it was new, and nobody wanted to go into that space. So as we said from the NIPC, if you want to do business in Nigeria, you first go to the NIPC. So we went to the NIPC, and here we are. And we have a whole lot of communities being powered by solar power. It's solar mini grid. It's a hybrid technology where we deploy solar panels to these communities, stack them up, bring in inverters, batteries, and we power the communities. Cost reflective tariff. Yes, the cost of importation is a whole lot, because we actually don't have manufacturing plants. We need to buy our panels from outside the country. We buy our batteries from outside the country. We buy our inverters from outside the country. There are some even Ethernet wires that we still need to buy from outside the country. But we now have some indigenous companies making some conductors and some wires which we use on our sites. So the government has done a lot, even in the regulation, the mini grid regulation. We have the best mini grid regulation in the whole Africa, because it allows investors to come in, spend 20 years in going around the country and providing power. But what we see as on ground is the fact that you have the federal government thinking about how to provide power, and it hasn't trickled down to the state government yet. So you go to the federal government and they give you a policy and say, okay, you're allowed to provide power in any rural area in the country, but you still have to get that permission also from the state government. And you get to sometimes even from the local government, and they're like, we don't understand what you're bringing to the table. Even if you bring in a federal government regulation or a policy on environmental social management plan, an environmental impact assessment, the resource, all they want to see is this is a new technology that billions of dollars are going into. So they want to see how they can harness that as well. But the disparity there is the state governments are saying, what are you bringing to our state aside just providing power and charging tariff? And the federal government is saying, allow everyone who can come in to do this. So for us, that's one major disparity, which we have seen in the space, because we've been here for over 7 years. We started off in the US as Renewvia started off as a solar canopy installation. And right now in Africa, we have over 20 grids. We're serving over 10,000. We have over 10,000 connections with almost 50,000 people. In Nigeria, we have over 1,640 connections. All these are in rural areas. We followed up with the World Bank's program of trying to see how we can have a urban-rural migration. As we all know in Nigeria, everyone wants to do the rural-urban migration, but we're trying to change that narrative by taking the basics, which is power, to these rural communities where we have a whole lot of local resources that can be tapped into, but you find them being shipped to the urban areas. So yes, it's a new space and we're coming up. We have produced over 4 megawatts of power from renewables alone in the country, way back from 2015 till now. So what we would like to see is that synergy of state regulations with federal regulations on renewable energy. Let me stop here for now.
All right, thank you very much, Mr. Chris. I think, yeah, what's the focus of this? We want to look at these sectors. Manufacturing has been in recession for a very long time. It was actually the second quarter of last year that it came out of recession. Even from before 2016, manufacturing sector had gone into recession, but now it's bounced back. And then just as Mr. Olajide said, that government is taking a bet on manufacturing to lead the growth in this new national development plan. And it's very important because when we look at Africa and emerging economies, as Ari mentioned in the morning, the contribution of manufacturing to GDP is lowest in Nigeria, and that needs to be ramped up. So that's the importance of them. Then we're looking at the tech sector, which is responsible for much of the growth going forward. You're talking about disruptive technologies, the disruptive industry. So we've seen that the companies that are commanding the highest value in the world today, none of them was in existence like 2 decades ago. So whether you're talking of Amazon or Google or Elon Musk, any of these. So these are very new initiatives, new technologies. And then there is huge capacity for growth and leapfrogging right now, not the leapfrogging we used to talk about 2 decades ago. Right now, we have opportunity for leapfrogging growth, not through the traditional, second industrial revolution, third industrial revolution technologies, but we're talking about fourth IR in the tech. Then we see that Nigeria seems to be poised to do that. I'll get back to you, Nonye, to see how, because sometimes most government do not understand this. And you could see the huge gap we have in the system currently, especially when it comes to education. Our people have skills, but their skills are not quite industry relevant. So we have problem of employability. We have problem of jobs. So we have structural unemployment, not just cyclical or frictional, the kind that comes and goes. What we have is that there are jobs, but we don't have people who have the requisite skills for those jobs. And then there are emerging new jobs, and then our people are not yet skilled to do them. And then that is where the tech sector will come in. I mentioned CSR, but before you speak on that, Chris, you are in the rural area, and then you are talking about cost-reflective tariff. I know that has created all manner of problems for Nigeria when it comes to the energy sector. And some people will argue that that is the reason why we still do not have sufficient electricity. Because people will always, the society do not want to pay for electricity. Then how do you manage to charge cost-reflective tariff in the rural area? Are you making money?
Quite truthfully, right now, we're not making money because the renewable energy space is long-term investment. Our ROI base minimum is 7.5 years. And thanks for bringing this up. You don't have local lenders per se, because the interest rates are in the double digits. But we have to charge cost-reflective tariffs because, the federal government brings up initiatives to cushion that tariff with some grants. But still yet, if you look at it, we're importing batteries that, if you have best warranties, are going to be exhausted in the next 7 years. You need to replace them. The best we can have are panels who are going to be there for 25, 30 years. But in all that, no, we're not seeing that push locally to say, okay, if we have the drive from locals, from Naira-based investment to say, this is what we want, the tariff will be lower because it's Naira-based. And there's no way right now we're going to have single-digit interest rates. It's not possible because the dollar, we all know what it is right now. We know what exchange rate is, and you have more foreign investments because they understand the dynamics and are that patient. So yes, we are charging cost-reflective tariff. We haven't started making money yet.
Okay, thank you. I think
Yes, I have something to say.
yes, Mr. Oseji is for you to respond. Yep. We have challenges in that sector.
Yes.
And then what is, in fact, across all the sectors,
Let's just
problem of funding, problem of financing.
let's take the renewable energy sector. What we are doing in NIPC is that when we look at the growing sectors, when we look at the sectors of the future, sectors that will benefit the economy the more, we'll focus on it and begin to do deep dive, begin to look at who are the stakeholders, what can we do and what are we supposed to do to, first of all, make the investment environment in that sector to be conducive so that we can attract more investment. And at the same time, the ones that are operating there, for them to remain in business. I want to say here that we've been having discussion with the stakeholders in the renewable energy sector, particularly also we're looking at these small hydropower operators. At the moment, between now and I don't know, I may not give the exact time, before middle of the year, we're going to have stakeholder engagements to discuss incentives, to look at the challenges facing this particular sector. I don't want to mention, we're working with an international organization on that. We've gone so far to discuss so that we'll be able to get that stakeholders engagement. Then they will come up with the challenges. We'll articulate them and get the government side also to look at it and say, how do we solve this? Because the power sector, the energy sector is very, very important to the economy. All of us know there's no need of emphasizing it. And we know that the renewable energy sector will pay us more because that's where the world too is going. So we should not be left out. NIPC is taking the lead. We'll get them. I want to get in touch with him. Like I said, he has been in with NIPC. We have looked at incentives that are there. We find out that they are not attractive enough to attract the kind of investment we want in that sector. We've listened to what he mentioned. Most of the materials, most of all they need are imported. And the incentives that are offered there cannot address all these fundamental issues there. So we want to have a stakeholder meeting. The operators will come, the government sector, everybody will come. We'll say, look, how do we make this sector to be more viable? How do we make it to be more lucrative? How do we attract investment to that sector? So we're already working on that. It's my desk. I know I'm doing that. So
okay, thank you. Again, foreign exchange is is a problem. So Ari mentioned IMF Article 4, and everybody has been saying that we need to liberalize that. Okay, let money find its value in the market. Naira finds its value in the market. Of course, government doesn't want to have that because there is always this dilemma between satisfying the people. You don't want prices to rise, but at the same time, people who need the money can't get it, and then the necessary investment cannot happen. And then that also has to do with repatriation of funds as well. Because if you have to import in dollars, it means you have to also pay in dollars, but you are collecting your revenue in Naira. That's a big problem. Anyway, there is nobody from the central bank here, so we cannot begin to engage with that. So let me get back to the MD, the VP. You spoke about, he also made, Ujam ended up with implementation. Okay, we may have the right cocktail of policy, but the challenge is implementation. Is there ways, coming back to the CSR I mentioned earlier, corporate social responsibility, what can corporates like yourself, big corporates, do to support government to help in implementation of all of this? I don't want you to take the position of the Citibank executive who said, if the economics are not right, we are not dealing, right? Because if we leave it that way, right, eventually in the future, we may not have consumers to satisfy?
Yeah, thank you for the provocative question. Look, I want to believe, and I know for a fact, that the corporate world has a lot of capability that sits on their side. And this capability can be complementary to the intent of the government. And that is where the value addition happens. But there are preconditions for this, okay? The first precondition is for governments to really understand the role that they play in this. To your point, policies are there, but a consistent feature of what needs to happen from the policymaker standpoint is to orchestrate the engagement that needs to happen for the cross-pollination. Look at the audacious target we have. The National Development Plan is about 4.7% average GDP growth. We want to lift 7 million Nigerians out of poverty. Very audacious for the right reasons. Okay, so for the right reasons, right? Which means that there needs to be investment from the private sector in the targeted segments that is going to drive this in an inclusive way. Now, the know-how of how to motivate for investment or how to come with efficient solutions that drive productivity is what the private sector wants. But the orchestration required from the government is first to know that local capacity development is critical to what we want to achieve together. And an ailing business cannot be a better partner. So what does value addition mean directly to your question? And I'll put it in the context of the point I'm most passionate about this excise tax introduction. It's okay. So the first one is, how could this have looked? Train has left the station, we have 10 naira per liter, you know, it's law, we have to pay. I mean, the industry has to pay. One of the angles is a sin tax, or we want to reduce the level of sugar consumption and all that. But partnership, which I think it's still possible, in fact, which I think is what government should push for, is working with the industry to reduce the sugar content, for example. Reformulate your products. How can you get more sugar out of that? That is partnership. Because the industry then is able to achieve the objective of the government without putting additional burden on the consumer. So if I reduce the sugar, I mean, Ministry of Health, Finance, we work together with the industry. I reduce the sugar, I'm taking something out. That's not when I would increase the price because of that. Today, with the passing of this bill, which means that companies will pass prices to the consumer. Now we are trying to achieve something, but the end person is the one paying for it. But with the partnership model, for example, it could have been win-win-win for everyone. Just 2 minutes. What this also means, I'll give another example. Look at it now, we have 10 naira per liter. Partnership would be for the industry to work with the government and say, you know what is the most optimal rate that doesn't compromise the business, such that we don't have to scale down our operations, but we'll give you additional revenue. In my point of view, I think the government needs to work with the industry and say, okay, come, 10 naira per liter, okay, 3 naira, 4 naira per liter. If you pass this, and it's at the minimal impact to the consumer, would you be able to give me this amount of taxation that I'm looking for? Because I don't expect your business to shrink. What is happening now is you get more tax per company, but the bracket shrinks because they're losing revenue. So those kind of competencies would be what the industry can then come to the government and say, okay, we understand the market, we understand the consumer, we understand the retail channels landscape. we can co-create ideas that checks everyone. Okay.
Thank you very much for that. By the way, to put it in context, if you look at the corporate analysis last year performance of the Nigerian corporates, you see Dangote leads, so the cement companies, then followed by the telcos, and then I think, of course, the banks, the financial institutions. But then FMCG, Nestle is there among the top grossing last year. I think Coca-Cola also, you guys did well as well, but you wouldn't say that. But so what I'm saying is that these are the companies, the big companies that drive economic growth. So the necessity, and I'm speaking to the government rep here, that Ms. Oseji, of partnering with these people is crucial. So not just this top-down approach, because eventually, see this kind of the syntax now, the consumer is facing double wahala, right? He's consuming a lot of sugar, which damages the kidney, and then diabetes, and again, he's paying more for it. But the other one would have been that government partners with the producers, the manufacturers seek for healthier ways to reduce the sweet or the sugar in the sugar content of the drinks, then consumers are better off, isn't it? And then we've seen something like that happen when it comes to fortification of certain food, because government intention is to improve nutrition. Okay. Anyway, we do not have a lot of time. So I was told about 5 minutes ago that we have 5 minutes. So the 5 minutes already gone. So, but we cannot end without getting back to the lady in our midst, Ms. Ujam, because I'm interested in that sector. I'm interested in what is going on because I'm in the education sector. So I see the gap. I know what is going on, right? Not just that, I'm also in the data science area. So I noticed that there are so many jobs that we do not have profiles for in Nigeria. Okay, compared to India, right? So the Indians are eating even American and European lunches today. What do I mean by that? Jobs that an American can do, let's say for $300 per hour, an Indian will take it for $30 an hour, and will deliver quality. Okay, so these are outsourced jobs. They do not require physical presence in either America or Europe. Those jobs are all of there, and then they're all going to India. Nigerians, we do not have the skills. In fact, our school system, the curriculum, has nothing to do with all this. Do not address any of these things. So our people graduate from school, they do not have what you call in-demand skills, right? So education, actually, university certificate doesn't mean much these days anymore. You can get jobs, well-paying job. I know Nigerians, some kids who earn dollars, hard currencies here, doing programming, scripting for foreign companies, okay? Based on skills they acquired on YouTube and all of that. So what can Microsoft do to scale, this level of skills for our people? Talking about partnership and corporate social responsibility, not just about employability, but also entrepreneurship.
Okay, thank you very much. I think first of all, I'd just like to correct an impression. I wasn't challenging my colleague at Citibank at all. I was agreeing with her completely.
No, I know you didn't challenge her, but I just mentioned that just for the fun of it.
It's instructive because in the sense that the private entities are set up to make a profit. Government needs to be proactive in their engagement with the private sector. I love what my colleague from Coca-Cola said. I think public sector needs to be clear on what public sector's role is and what private sector's role is. Private sector, I think, can be harnessed as an enabler, can be harnessed as an implementer. We cannot focus our energy in public sector, in terms of creating jobs and hiring people. It's not sustainable because the country really cannot afford it. We do not have the kind of monies, we don't generate the kind of monies to keep hiring people. And it's not even countries that do. it's not just sustainable. What public sector can do is simply create an enabling environment. And we keep flogging this point, but it cannot be overemphasized. We can't, as a government, kick people out of the country and expect FDIs to grow. It will never grow, because if you have such draconian policies and implementation strategies, you are not attracting anyone. You are making people run away. In terms of the education sector and employability and all of that, there's a lot of work that needs to be done on that side. And it's really concerning because, as I said before, we are a largely youth population. So, starting from age 14 and above, what kind of level of education are they getting in comparison to other countries, that we compete with? What are the challenges in that for the future? I mean, there's infrastructural deprivation. You can see that already. So how do you not have a conducive environment for someone to be able to learn? But without meaning to overflog the issues, because I think we're all aware of what these issues are, what can we as private sector do? I think we already do a lot. And if you ask anyone that's in the private sector space, right, they'll tell you that, look, there is budget allocated for things like this because we believe in giving back to the society. That's the truth, because this is where we find ourselves. This is where we operate. So we truly believe in giving back. Microsoft, as I said before, does this skilling for entrepreneurship initiatives, which we try and push as far as we can. One of the reasons being that we do realize that everyone is not going to work for someone. But there are innovations. Nigerians are very creative. There are innovations that we can spark up, and we support. We actually do currently support entities like that. There's also the contribution to some curriculum that we do through the Universities Commission. So there's a lot of work going in there. But it's very important for me to note this very last point. There has to be proactive engagement from the government side. Private sector cannot do the job of government, and government cannot do the job of private sector. There needs to be synergy. We need to work together.
Thank you very much. Synergy, working together, partnership. I think that is where we will end this panel, but we'll not end without having a question from the from the audience. Yeah, I don't know if you have any question or comment. Okay, great.
Thank you. My question goes to NIPC representative. Maybe so from observation, you made mention of the OSICLA process, where investors or businesses in Nigeria are having challenges with maybe another government agency. So from experience, I've been fortunate to attend such sessions, but to our disappointment, the outcome of that session was not honored by another government agency. And these are some of the challenges that we do have processes that are established to support some, but then the outcome also leaves the bitter taste in the hands of the investors. So how are we able to make these processes or policies that are in place work so that they remain binding and also boost investors' confidence?
Okay. Thank you. I want to stand on what has been said there. This issue of engagement, partnership, and so on must continue. And that's why NIPC is taking it in that way until all the parties understand where their rules, like has been mentioned earlier, we will not be able to have that clear-cut implementation of some of these things, because many of them don't understand the negative impact that will be on any investor if an agreement is reached and is not implemented. And because NIPC is we're just a persuasive agency, we persuade, we continue to do that until solution is gotten. We won't stop, but I understand what you mean, but we don't get discouraged because we continue to engage, we continue to partner, we continue to talk until all of us understand that the economy, if it's improved, is for every stakeholder. So that's what I want to say there. We don't get discouraged. We know that it's like policies and laws that are brought forward. Not all of them are implemented to the later, but we'll continue to engage until all of us understand the need to do that. Thank you.
All right, thank you very much. I think that's the only question that we can take. So I would like to thank my distinguished panelists to my left, Mr. Alfred Olajide, the MD VP Coca-Cola Limited, Nigeria, and then Mr. John Oseji, the Director of Policy Advocacy, NIPC. And then virtually I have Mr. Chris Ebiware, the CEO of Renewvia, Renewable Energy, Solar Energy Company. And then last but not the least, Ms. Nonye Ujam, the Government Affairs Lead, Microsoft. Thank you very much. And thank you, distinguished audience, for your patience.
Thank you.
That's good too. All right. So you can stay here. Good. Thank you. Just balance it out. All right, smile. One more, please. Thank you.
So thank you very much, everyone who stayed till the end. And really, on behalf of the American Business Council, we'd like to thank you for sitting through, and also for our moderators and our great panelists. And yeah, we look forward to you joining us for the next event that we would have. So yeah, thank you, everyone.
Lagos Free Zone, the first private free zone in Nigeria with a fully integrated deep sea port, is an ideal location to serve the demand centers in West Africa, home to about 350 million strong consumer base. LFZ is well connected to all major cities in the hinterland by road and by air. We are located 65 kilometers east of Lagos metropolis along the Lekki Corridor, the Sunrise Development Corridor of Lagos State, fast consolidating itself as the engine of economic growth in Nigeria. Uniquely integrated with Lekki Port, the deepest seaport in the region, Lagos Free Zone unlocks deeper reach to local and international markets. Sustainably developed as the premier investment location for varied businesses, LFZ is an ideal destination for manufacturing facilities due to its strategic advantage in enabling easier access to critical success factors such as land, world-class infrastructure, and an unwavering commitment towards enhancing the ease of doing business in Nigeria. Investors in Lagos Free Zone benefit from the conducive and hassle-free live-work-play environment. Amenities such as housing, hotels, parking hubs, communications infrastructure, power station, medical facilities, and leisure centers are provided and maintained so that you can focus on growing your business. In addition to the enabling environment for growth, investors at Lagos Free Zone enjoy a host of fiscal benefits and preferential policies backed by the federal government of Nigeria and the Nigeria Export Processing Zones Authority. These include various tax benefits, import duty exemption, unrestricted access for skilled workforce, and tax-free remittance of profits and dividends. Lagos Free Zone is a world-class industrial zone, carefully planned with state-of-the-art infrastructure, services, and facilities to help your business thrive. We welcome you to Lagos Free Zone, your gateway to a new frontier.